tempted to say that the valuations that you saw in the last super cycle of banks, where you saw the likes of ICICI, HDFC, Kotak trade anywhere between 3.5 to 4 times, I don't see any reason why those valuations cannot come back, because these are FII favorite stocks. India is a market devoid of FII money today. If and when the FII money does return, it's first going to find its way into the banking stock. So I think a clear overweight for me is banks. I think we're done with interest rate cuts. At best, maybe another 25, but that too subject to what I was telling Neeraj earlier, that oil doesn't spike. So I think net interest margin pressures are well and truly behind us. Asset quality is very much in check. I think most banks, if you look at their tier 1 and tier 2, are very well capitalized. And the cost to income ratios for most large banks are expected to decrease by 200 to 300 basis points over the next couple of years. Put all of this into a pot, stir it really well, and you probably get a situation where bank earnings could compound by 14, 15, 16% over the next 2 years, which makes banking an absolute blind bet in any market correction for me. The second would be maybe not so much because of valuations, but just because of the conflict that's happening globally. And again, something that you guys were discussing a few moments before I came on the show, which is defense. Obviously, the defense budget in India, which was the single highest allocation, I think the finance minister increased by 15%. The order books are so strong for the Indian defense companies that my own understanding is if they don't win a single order from here on and just execute the order backlog, these companies could be able to grow 20% plus for the next 3 years. Consumer discretionary looks all right. Obviously, aviation's been a bit hit right now, but I don't see any reason why that won't rebound once it stabilizes. Alcobev stocks, hotel stocks. So that's another pocket that looks interesting. And 2 other pockets I'd probably leave you with from a sectoral allocation perspective. If you have auto stocks, no reason to sell. I'd use every dip to buy. And I think this could be a year where pharma could also come back in a fairly decent way. So my entire allocation will probably be rested around these 5 sectors with a clear single overweight or highest allocation, maybe even 200-300 basis points higher than the index weightage on the banking sector.
Rahul, good morning. I see that IT has not figured in your list of buys, is in your list of sells, or is it let's wait and see what happens?
If you permit me a line in Hindi, Tamanna, I think IT could be the hukum ka ikka for this year. I don't know if this is a structural bet I'm going to take, but let me just, sort of put this in an anecdote form. I mean, IT companies in India have so much cash on their books and they still get bought for the wrong reasons. People buy them for free cash flow yield, dividend yield, rupee depreciation. I mean, if you want to trade into IT stocks for those reasons, you might as well trade the currency or any other form. But my sense is that because they are so cash rich, you're going to see an era over the next 2-3 years, or maybe it could start as early as this year, where cash balances of IT companies start decreasing, where they start buying growth into artificial intelligence, robotics, so on and so forth. It's going to be very difficult for the bellwether IT companies to reskill employees. I think, once you cross 35, 40 and you've sort of processed your life on C++ and the likes, it's very difficult to reskill, but you can always buy that growth. So I think you are going to get into a situation where cash levels for IT companies will come down, return on equity will go up, and instead of buying IT companies for the wrong reasons, we may now potentially be buying them for growth. So if you look at TCS, Infosys, HCL Tech, Wipro, most of these companies are projected to grow anywhere between 7 to 10% top line over the next 2 years. With a little bit of margin expansion, their bottom lines will probably grow at 10-12%. But if they buy growth, and these numbers, like I was talking about credit growth, and that goes into the 13s, you've had such a reset in IT valuations right now that after banks, if you look at, and this is subject to buying, going in and making those inorganic moves, which is why I did not mention it in my first answer because it's an unknown. But if they go out and buy these capabilities, you'd be very surprised. I would not be surprised if IT companies return you 30-40% over the next 12 months. And this includes mid-cap companies like Persistent, Coforge, KPIT, and the likes who are doing exceptional amount of work, in obviously smaller ticket sizes, but with auto, AI, and other related projects. Coforge has even gone and made a very large acquisition, and that could be a template that a lot of others follow as well.
Okay, so IT is there on the radar, could be the hukum ka ikka, as you say. Any view on FMCG? Seems one of the safest spaces in terms of a defensive play right now. Whether it's wars, whether it's AI, whether it's tariffs. Do you think that's a safe bet that you would want to look at favorably?
So again, to use a metaphor, Tamanna, I think sometimes the safest places are where the light is the dimmest and it's the darkest. I think you've got to go really deep into the bunker to find a safe space. Volume growths are not very encouraging, Tamanna, in consumer staple companies. I think even if you looked at the bellwether Hindustan Lever, struggling to do 2, 3, 4% kind of volume growth. Food companies are relatively doing better. I think if you look at Britannia, Nestle, Tata Consumer. So if I was to buy consumer staples, I'd probably stick with the food companies, not so much the non-food staples right now. Of course, you do have a quarter where you have a high single-digit growth shown by a Godrej or a Marico, but these are not very sustainable as we've seen if you take a 2, 3, 4-year CAGR. In a couple of months from now, maybe sooner, we'll start looking to the heavens to see what kind of monsoon predictions we have, and then we'll go back to seeing what kind of rural demand is there. But I think if you want to play consumer, Tamanna, a bad way may not be to play through two-wheelers. I think that is also consumer if you stretch it out. I think TVS, Bajaj, Hero, in their last monthly numbers all grew various sub-verticals of theirs between 25 to 40%. Valuations, you can argue them one way or another, but at least you're getting growth. So not too gung-ho for paying 45, 50 times valuation for companies that are growing volume sub 5%. But like I said, if I must make an allocation to consumer staples right now, it would be more towards the food companies, Nestle, Tata Consumer, and Britannia. Britannia would be the top of the pick there.
Okay, Rahul, thank you for this conversation this morning. Yes, there are opportunities there, but maybe in another 2 or 3 months, BFSI is top bet as per Rahul Arora. But talking about defense, which was also on his list, the US-Iran war has brought defense players to center stage. The defense plays in action with focus on key Indian players. We have MTAR Tech Management on the show, but before we get to that conversation, Puneet just setting it up for us, because Puneet, it's been a fabulous set of results as it is for MTAR.
Well, most certainly 100% growth in profits in quarter 3, but 4 key points. Stocks up 51% just in 2026 and shows you the strength of this particular counter. The other aspect that the company's order book currently stands at almost 2,400 odd crores. 1,300 crores was added in quarter 3. So the perspective of the company at this point of time becomes very important. Third key point, 84% of revenues come from the export market. So just how would this, while they have a very strong order book right now, how does this in terms of execution as well as which are some of the key countries that they are working with will be the third key point. And also fourth, while we are focusing on the current war as well as what the company is doing at that aspect, data center as an opportunity has propped up for MTAR actually at this point of time with Bloom Energy and a decade-long partnership. So those will be the 4 key aspects, but the main focus continues to be on this particular war as well as 84% revenue coming from the export market for the company.
Okay, thank you so much for that, Puneet. Parvat Srinivas Reddy, Managing Director, MTAR Technologies Limited, joining in on the conversation this morning. Mr. Reddy, thank you so much for your time to speak with us. First, I'm going to get your take on the current situation, and as much as you can tell us, because I know this is a sensitive sector right now. So keeping that in mind, what do you think are the opportunities here for Indian defense companies? How is India looking in its defense capabilities right now?
See, look, the opportunities are immense. It's only about how you develop the technologies over a period of time. What kind of collaborations do you have to fast track certain technologies? We have been in this sector for many years. Most important thing is how we can fast track the whole technology related issues to build our defense portfolio over the years. So that's the key to this whole situation right now. And I think we are moving in that direction with the support of Government of India and various other organizations. So I think it's a matter of time that over the next couple of years, we'll be right up there in terms of what we want to achieve in terms of the various goals that we set for ourselves overall for the country as such, in terms of what we should do and how we need to take this forward.
You also have tie-ups in business with the major Israeli defense companies, if I'm not mistaken, 3 of them. Has there been an increase in requirements in the last few days, looking at the geopolitical situation? Anything that you can share there?
No, we have enough of a strong order book, and orders are flowing in from that direction as well. But last 2-3 days, nothing much will happen, right? Because of the war, and they'll still be working on other issues. But yes, I mean, the requirements are coming in. It will continue to happen in a bigger way. And we have been working with all these leading companies in the past, and we continue to work with them. And we have established ourselves in terms of quality and deliverables with all these companies. So let's hope that things will improve even further.
Mr. Reddy, just want to get a sense on execution and what the timelines are looking like. If you're talking about your order book as of the end of December at about 2,400 crore rupees, what is the outlook on how much of that gets executed heading into the end of FY27? And what is the run rate that you've been establishing and expect to continue in terms of order acquisition heading into FY27?
See, we are expecting, I don't want to comment on the next year order inflow, but we will be getting strong orders moving forward as well, the way things are going right now. You must have seen in the last quarter and even in the current quarter, we have received substantial orders. The execution, basically I've said, some are long-term cycle orders and some are short-term cycle orders which have to be executed within 1 year. So when I said that we are looking at a revenue guidance of 50% increase for the next year, that itself is an indication that a lot of orders are going to get executed within the 1 year span itself, and the rest will move on to the second and third year.
Mr. Reddy, I'm not asking for specifics, but we've seen in the past that geopolitical tensions and warlike situations and wars in particular have resulted in fast tracking of certain orders in certain situations. So I'm wondering whether that is something that you anticipate will happen, particularly because so much of your book is export facing.
Yeah, it should happen. It will happen for sure. Obviously, the requirements will go up. They fast track a lot of such requirements during this period, the way things are going right now. It's pretty unfortunate, but that's what it is. So I think, yeah, that's an added advantage that we'll have in terms of a lot of orders getting fast tracked and volumes also going up based on the requirements of the customers.
Mr. Reddy, you framed FY26 as the highest ever order inflows, but particularly because of clean energy fuel cells and civil nuclear. Now the defense element gets added. Would you believe Q4 itself could be higher than the 700-800 crore implied that was believed to be at the end of Q3 after your con call?
Yeah, I mean, can you repeat your question, please?
What I'm saying is, for FY26, when you laid emphasis on your order book, it was for civil nuclear as well as clean energy fuel cells. Now that the defense order flows would likely be stronger because of all that's happening around, would you believe that your Q4 order inflow, which analysts pegged at 700 to 800 crores, could actually be higher?
I wouldn't say that. It won't be high because things won't happen overnight, in spite of anything happening, external factors. But moving forward, probably those orders can kick in because we're hardly looking at another 3 weeks from today. So it doesn't happen in just 2-3 weeks. But a lot of discussions are on the anvil right now. And hopefully that things will move the beginning of the next quarter as far as the additional orders are concerned. I don't think there'll be an impact of getting additional orders by end of the year.
The other piece, Mr. Reddy, very quickly, Scott Bessent has said that apparently that 15% tariff comes into play today. Do you get impacted in any fashion because of this 15% tariff, or now it's equal for everybody and therefore no particular advantages or disadvantages?
I think the tariffs was not an issue at all. I mean, it's not about the percentages because we are not, I have mentioned this earlier as well.
Okay, so not an issue for you at all. Fair call. Okay, Mr. Reddy, we wish you all the best for the times ahead, and hopefully at the end of Q4 you might be in a better position to talk about what happens to order flows in FY27 as well. Thank you so much for taking the time out and being with us.
Thank you. Thank you so much.
That's MTAR Tech, 3.5% up as the management spoke to us. well, a beneficiary, but they're hoping that the conflict ends soon, as is everybody else, I'm sure. Okay, let's get in one more very important conversation going. A lion's share of rice exports from India is to the Middle East, with over 4 lakh tons of rice stuck in transit amidst this ongoing disruptions. Let's get in the picture about what's actually happening on the ground. Before we get in the management of one of the rice companies, let's go to Mahima for more context. Mahima.
Right, so Neeraj, I'll start with how India exports to the Middle East. Industry-wide, 76% of rice exports from India go to Middle East in terms of volumes, and this is the 2025 number that I'm talking about. Middle East accounts for nearly around 3/4 of India's total Basmati exports, and this is because excellent quality standards have spurred in the last couple of years and have increased the demand for Indian Basmati rice in the Middle East for locals as well. Now, specifically for KRBL, the exposure for FY25 stood, the overall, of course, the export revenue stood at 1,473 crores, and from this, 61% of Basmati export revenue came from Middle East. Now, key markets for them include Saudi Arabia, UAE, as well as Kuwait and Qatar. The outlook, the commentary that management gave in their annual report with regards to Middle East exports, they said that consumption in Middle East is forecasted to see a continued growth with rising population, and there is a surplus demand for Basmati rice in Middle East, giving the market's future a positive outlook. Now, we'll have to wait and watch out for as to how this narrative changes because of the entire war situation. In terms of key analyst expectation, analysts are expecting around 30% of KRBL's total revenue to get directly impacted because of this conflict. The key concerns, of course, are the port congestion due to shipping uncertainties, plus there is price volatility as well into picture, and of course freight and insurance premiums are also rising on the back of this. So all of these combined together could pose some concern with regards to exports to the Middle East right now for the company. And overall, if you take a look at the derivatives that is come in from the Rice Exporters Federation as well, they've advised to stop using the overall CIF contract and go to free on board contract as well. So this is the overall view.
Wow, that's a lot of talking points, Mahima. Thanks for that. Let's get in Ashish Jain, the CFO of the company, of KRBL rather, on the show to talk about, some of the points that Mahima, of course, spoke about. Ashish, thanks so much for joining in. One of the points mentioned by Mahima, as per analysts, is that this conflict could have an impact on 30% of your business. Now, are those numbers ballpark correct? And by 30%, if it's getting impacted, what's the nature of the impact?
No, sure. Thank you for having us. Yeah, so if you look at the 9 months ended December, exports accounted for just short of 30% of our overall revenue. A large percentage of that comes from the Middle East, which has been affected in the current conflict. So yes, this does have an impact. However, I also want to reiterate that, Basmati really forms staple rice for that region. So, just because there's a conflict, people don't stop consuming rice. So in the medium term to long term, we see the demand sustaining. So this is a temporary issue from our point of view.
How much rice is stuck right now? How much of your consignment is stuck right now, Mr. Jain?
Yeah, so we don't have any major exposure to the logistics issues that have resulted out of this conflict. We would at best have a few containers, and that too should reach the designated markets. They would have already reached, or they would be on the process of reaching, because the total journey time from India to most ports in the Middle East is just about 6 to 7 days. So no major exposure in terms of the goods in transit from KRBL point of view.
No, so the Strait of Hormuz being unusable for all practical purposes makes no difference to you? How are they reaching these ports?
No, I was responding to the question in terms of what is the current exposure in terms of goods on transit.
Okay, so at the point of which, so in the last 3 days, you had nothing that was in transit?
No, there was, but the quantities are not very large, a few containers at best.
Okay, which you are hopeful will be stuck. Are there any legal mechanisms or insurance in play to cover any losses you would bear?
Yes, so most of our exports is covered by marine as well as credit insurance. So therefore, the residual exposure is very small.
In the interim, Mr. Jain, I'm wondering whether you will look for alternative means of transporting your product, because people are using air freight as an interim, and you've mentioned that you expect this to be an interim situation. Is that something that you're considering?
No. The reason is that our product tends to be bulky in nature. So, I mean, rice by its very nature, rice is voluminous, and therefore other modes of transport don't work out very well for us, especially from a cost point of view.
So then in the interim, considering that you are not going to be able to ship through the port of Hormuz, are you going to contemplate through your partners alternative routes to ship your product?
Yeah, I'll just explain the situation. So, at any point in time, our partners, as well as other players in the channel, they carry stock. So we don't see an immediate impact on consumption from an end consumer point of view. I think there are sufficient stocks in the affected countries to manage consumption. And the real impact is only to be seen if this current conflict extends beyond the foreseeable period. But in the immediate, considering that there's enough quantity from a consumption point of view, I don't think there's a need right now to explore channels, especially because they don't work out from a cost point of view.
So let me follow that up. How long do you anticipate this situation can continue? Because we don't currently know, Mr. Jain, how long this conflict will continue. And so therefore, is this estimation for the next couple of weeks, for the next month, for the current quarter? How long is that?
Well, you're really asking me to stick my neck out in terms of predicting the outcome of the current situation. Unfortunately, I'm not very well placed to do that.
It's not what I'm asking you, sir. Mr. Jain, let me qualify. I'm not asking you to predict when the outcome will be done. But I'm saying, you're saying that for now, the supplies that are currently on the way or your current inventories are sufficient to take care of immediate demand. And so therefore, my assumption to that statement is that incrementally you're not likely to add to that supply considering the current situation. So what I'm trying to get is, how long are you anticipating that this status quo will last? At what point will you say that you are going to lose out on sales on account of not being able to ship additional product?
Sure. So, like I said, given the nature of the commodity, that it's an essential staple in the diet of the affected region. So, we don't generally lose out on sales. It's just a matter of postponement. So, if the supply chain is affected, then to that extent, the shipments get postponed. Right now, the other way to, I think the other aspect of your question is that what is the level of inventories in the affected market? So these markets usually carry sufficient inventories. In fact, given the build up to the current situation, we had seen inch up in Basmati prices, which was perhaps led by higher than anticipated demand, largely emerging from the region, which was building up inventories in anticipation of potential events.
Ashish, just a follow-up to what Alex was trying to ask you. In your answer, you mentioned that for the foreseeable future, there is not a problem. That's the summation that I took. So could you define that foreseeable future? Till when do you not have a problem, post which there could be some problem?
Yeah, I would say as long as this whole situation gets resolved over a period of, 1 to 3 months, we don't really see an issue. It's only post that we see the current situation becoming an impact on consumption.
1, 2, and 3 months is a very long time. So you are okay until 3 months. Would that be a fair assessment?
Yeah.
Okay, you are okay until 3 months. Okay, thank you so much for putting that into perspective. Really appreciate your time. And all the best, of course. We hope that this resolves sooner for your business and for the sake of humanity at large.
Thank you. Hope that too.
Yeah. I'm sure you do. I'm sure all of us do. Yeah. Let's hope it really gets resolved soon.
I think it's so today's show we're focusing on what is happening from so many different angles, right? We've spoken about the defense play, we've spoken about rice exporters, and the other angle that we're looking at is real estate, and Dubai real estate seems to have become the hottest investment destination, especially for Indians. Is what has happened in the UAE and in Dubai going to dent that real estate market? Could some of that demand actually shift towards India? That's part of the question that we're answering today. And joining us on the show now to speak on it, we're going to be speaking with Prashant Thakur, Director and Head of Research at Anurag Group, and Vimal Dharamshivaya, Founder and CEO of Apex Capital Real Estate in Dubai. But to break all of this down, Mahima is joining us with the key details. So now, Mahima, some things to look at. First of all, Dubai real estate, of course, hot. How many Indians are buying Dubai real estate? And now what happens to prices and the outlook there?
Right, so Tamanna, brokers right now are kind.
I think your mic is fallen down, Mahima. I'm going to wait for you to maybe get it and then come back. And before we come back to you, let's see if our speakers are up and about and we can actually go to them. Vimal Dharamshivaya joining in right now. So Vimal, let me get your take in. You're joining in from Dubai, I believe. So, what is the kind of queries that you're getting right now?
First of all, good morning. And currently on the situation where queries are coming in, I'm actually experiencing buyers looking for some good deals around.
Really?
Yes.
Okay. What is the expanse and presence of India on the Dubai real estate scene? I'm talking from the point of view of Indian builders, of course, people in the real estate industry like yourself, and more importantly, buyers, HNIs.
Yes. India has been the largest buyers, not now, but over 20 years. And we have seen Indians buying property. Hello?
Go ahead.
Yeah, Indians are buying properties for the last 20 years in Dubai. And the largest buyers of the UAE real estate is Indians. At this point of time, we understand that it will continue as what I'm seeing for the last 5-6 days. There has been no movement. Everybody is still strong and positive.
Prashant Thakur with us as well, Executive Director and Head of Research at Anurag Group. Prashant, usually we ask you about micro markets here in India, but this is something that has been on the radar for a lot of people looking to even take advantage of the tax treaty. And so therefore, what are the latest trends that you're seeing in the property market there? Are people continuing to look with a lot of interest at that market?
See, let us first, acknowledge that year 2025 was the best ever year for Dubai property market. Approximately, $250 billion worth property was transacted. And especially for Indians, I think it kind of has added advantage if you take into account, the proximity, the conducive policy that you have. And also, because of these factors, close to 22% of the buyers come from India. And having said that, the market itself, was on a strong note, and people were kind of debating already that whether Dubai property is overheated or not. This conflict kind of, intensified. As of now, what we are seeing is that people are taking a pause, but the sentiment, I think, is kind of quite intact for long point of view. So this is, in my opinion, based on my interaction with the clients and few big investors, I think people are kind of waiting and watching. And in fact, there are few people who are looking forward for some kind of value buying amidst this kind of top correction or kind of stabilization. But the long-term story remains intact. Dubai is highly diversified market. Close to 150 nationalists from different countries participate in the Dubai real estate market. And I think this phase would pass. But yes, these are uncertain times where purchase decisions on hold for some times, and they will wait for clarity. That's what we are kind of seeing right now.
Shant, good morning, Neeraj here. I'm sorry, I'm just trying to be the devil's advocate here, but I'm surprised that there is a fairly benevolent mood right now on the panel. Vimal also said that he's receiving queries for buying. I'm surprised. I would think that if I was a buyer right now wanting to buy into Dubai real estate, I would think that the lack of buying interest in an economy or a country which has been impacted by the attacks, and which was considered to be the gold standard for safety, is no longer that prices which were overly stretched for the whole of 24 and 25 would probably see at least a 22 or 25% corrective move. Why would a buyer want to come in right now wherein the anticipation would be that there will be a correction?
Yes, there would be correction. Let me, let's, go back in the history where we saw a couple of other crises happening in Dubai market. For example, the 2008 GFC crisis, we saw a price crash of almost 50 to 60%, and the recovery time was 6 to 7 years. Now, if we talk about 2014 oil price slump, the price that, the correction we saw was close to 20 to 25%, and the 5 to 6 years. Now, another unprecedented event that we saw was pandemic COVID-19. There was a disruption of 1 to 1.5 years, but the price recovered sharply, right? So look at the fundamental of the country remains quite intact, right? And the kind of diverse buyers you have in the market, I think that provides the resilience. So what I meant was that we are receiving queries for buying is not immediate buying, but people are curious to see whether they can get a bargain deal, or they can at least this gives them an entry point. There are a lot of buyers who feel that they have missed the bus. The kind of appreciation we saw from 2020 to 20, I guess close to 65 to 70% price appreciation we have seen. So there are a lot of buyers, a lot of investors who felt that they have missed the bus, and then this blip, or let's say this, I think provides them with an option of taking a decision of entering this market. So there are a lot of queries, curiosity around, but yes, people are slightly cautious.
No,
some kind of economical blip that we are seeing.
Fair point. But Vimal, that question is frankly directly to you, right? Are you indeed seeing buyers wanting to come and buy right now, or they are inquiring for projects and they will wait for a corrective move? Part two of my question would be, what would your advice be to somebody who's coming to you and asking you that should I buy right now or should I wait for a correction?
Yeah, so first I would address this for the first question, where we have receiving inquiries in terms of people are waiting for the opportunity or any good deals that come down to the market. So A, the buyers are open to that in the current situation. B, of course, we all understand how Dubai has dealt with crisis situations in the past and how it has bounced back. So the confidence is still there. C, currently there are no sellers that I am getting. Even if we have the buyers, we have no sellers who are showing any signs of selling, or we are only giving them reassurance. And I personally would say that if any seller is out there in the market to sell, they should hold on to the property, because real estate is about not panic selling. It's about long term. And that's what we are experiencing right now. We are having inquiries from buyers, but unfortunately, the sellers are still all strong. And I believe this moment will pass and Dubai is ready to bounce back again.
Obviously, everyone hopes that. But, we're looking at the whole real estate market from an investment point of view. And I understand, Vimal, your perspective will have to be more positive. I mean, you're sitting in Dubai in the business of real estate right now, so you can't expect any other view. But from a perspective of where prices could go, Prashant, at its very core, the idea that this is a safe haven oasis has been shaken for now. I'm sure it'll bounce back. Will that lead to a long-term re-rating of how real estate is viewed there? Because real estate in Dubai is also viewed with the fact that it comes with the ability to stay there. It comes with that golden visa, etc.
See, again, I would say that in certain situations like war and pandemic that we saw, it's kind of very difficult because you don't have a phase to kind of comment on. But again, having said that, the kind of fundamental and the kind of advantage and the kind of diversification in terms of buyers that Dubai provides, I think that's the core strength. So we would definitely see some kind of price correction. But again, as I said, that there is a strong feeling among various set of buyers and investors that they missed the bus to participate in the rally that they saw after COVID. We would see certain amount of dip happening definitely there's no point that it will not happen. But again, the recovery, in my opinion, would be quite quick.
Would be quite quick. Okay, let's hope for that. Let's hope for stability to come back to the region. Definitely, everyone's interests align on that. Prashant Thakur, Vimal Dhamshi, thank you so much for joining in on that conversation this morning. I'm also pleased to report that markets are staying steady. I mean, it's only Nifty IT, which was the one lone trader yesterday, that is now looking at
For now,
a bit of a sell-off, but Nifty is doing well, 146 points up. It's banks that are carrying the day, possibly, and that's really what's working as far as the Nifty is concerned. Broadly, look at the recovery in metals. I want to pull up the Nifty metal if we can, and this was the worst hit yesterday. Maybe a bit overblown, the concerns that were coming in, even though China now telling all refiners that you are not going to be able to export prices, etc., is going to be a problem. We'll take a very short break, but on the other side, we'll connect with Anirudh Sarkar of Equinova Investment Managers for his picture on Talking Point.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame.
Recovery mode in markets this morning. Will it last or not is the question, but definitely India is following the cues that we've seen across the world, right from European markets last afternoon to, of course, the rest of Asia doing well, as well as US markets overnight. So that continues. The biggest losers of yesterday are the ones that are recovering the most, whether it's the metals pack, even oil and gas is seeing an uptick there. But we're going to focus on auto for a second. And as JLR sales continue to slump due to recent cyber attacks and slow demand, is it time for the street to tilt focus on Tata Motors PV, which is set to benefit from robust domestic demand? Puneet joining in with more. Puneet, if you look at the Tata Motors PV stock, it's actually two very disparate businesses in one, and which are performing also at very different rates, isn't it?
Well, most certainly. And while we have started to see that valuation tilt to the premium side for the India PV business. That's clearly visible in the numbers. So there has been a slump definitely in JLR sales. When you look at from November to February, and we're taking this time because the cyber attack happened sometime around August and September for JLR, we've seen a consistent decline. A 37% degrowth was registered in November, and while the fall has lowered essentially from that to 19% now, it continues to be one of the worst years for JLR in the last 10 years, and hence continues to be one we monitor. When you look at the India PV business, the passenger vehicle business, it's a complete opposite picture. The GST rate trigger continued to be one of the biggest positives, and the company has actually outperformed its peers, including Mahindra & Mahindra and Maruti in the last 4 months, with a growth of almost 26% in November, growing to 35% in the month of February of 2026. The disparity is, of course, known. There has been the cyber attacks for JLR as well as the global slumps in sales in Europe as well as in China. And in the US, the tariff impact has hampered, while for the India PV business, it is the GST rate cuts. I want to quickly highlight one key aspect that brokerages are penciling in, that the sales registered in FY25 for Jaguar Land Rover, roughly 4 lakh units, that number will not be hit for the next 3 years. So till FY28, they're penciling in only a flattish growth and just 3.8 lakh units sold in the next 3 years. Shows you that the next 3 years also seem very timid. On the other hand though, the PV sales, it's a complete opposite picture yet again. The company sold 5.6 lakh vehicles in FY25. That is expected to grow for someone like MK to over 8.5 lakh units. Nomura pencils in at least 7.5 lakh units. So shows you almost a 37 to 50% growth from the current levels for the India PV business. Finally, in terms of valuation, you've seen the global peers also cut down in terms of valuation for both BMW, Mercedes, and JLR is also similarly impacted as well. And in terms of the premium, you see that for the India PV business, the premium has inched up, while for JLR, it has inched down at this point of time. So that's the story on Tata Motors. You will start to see a lot more talk and mostly on valuation, hopefully, for the India PV business going forward.
Well, autos, if not in the fast lane, at least in the stable lane, you have to admit that. Thanks, Puneet, for that. I mean, auto and auto ancillaries, look at what Bharat Forge is doing, look at what TVS is doing. Well, some bit of decent performance today. Anirudh Sarkar, co-founder and CEO of Equinoa Investment Managers, joins us right now on the show on a day when the Nifty is stable for the first 45 minutes at the very least. Anirudh, thanks so much for joining in. Is this would you view this period as the one with uncertainty and a downward bias, or do you believe the corrective move thus far bakes in the negative impact of the rising crude prices and the earnings loss for Q4 at the very least?
Yeah, hi Neeraj, very good morning, and I would say it's a good day to be on the screen because when you have the green on the screen, it's good to talk about the market. But to be honest, I will say that if I look at the last 1 week, the way the Indian markets have behaved as compared to most of the global markets, I think it's very evident that at least the domestic investors are not going to sell in this event which is happening. And any decline in the stocks, which you would have seen in any company, I think the declines have been on extremely the low volumes. And as we all know, when the declines happen on the low volumes, it's an indication that it's not a panic selling which is happening, but more than that, the buyers are absent, and anyone who has to sell is just exiting at any price. So I would say the last 1 week's kind of the resilience of Indian markets gives me a confidence that a lot of investors' attention is moving beyond the geopolitics, beyond the crude, to actually the earnings which has just gone by. And I think that is where markets are gradually trying to align their portfolios, that looking at the pockets of where the earnings have been. Because I think if I look at this quarter numbers which went by, I think it was much better than most of the last 6-7 earnings quarters which has gone. So I would say market is looking a bit beyond the crude and the events, because we have had many wars in the past, and I think this is also going to be kind of the short-lived. Impacts are always very steep whenever the events happen, but the recovery is equally fast.
Anirudh, good morning. Were you a buyer in yesterday's market?
Yeah, absolutely. So any new clients who have, who have entered the portfolio, we have been buying and making advantage of all the panic which is there on the ground. And as I mentioned, the declines have been on extremely the low volumes, and that is giving me confidence that we are very close to kind of, seeing a decent upside in the market. Also because a lot of things has actually come together, and that's the reason, I'm buying in this market. So this month being the last month of the year, we all know that the long-term, short-term capital gains and the capital loss, all those adjustments happen. Along with that, we had the tightening from RBI with regard to the MTF trading. And to add on to it, we had the Middle East crisis. So everything got packed into 1 month. And I would say that the earnings is the green shoot in the whole pack of events. And that is where I'm betting on. And in fact, I was just hearing your earlier conversation on the auto sector, and I was happy that that sector continues to be the largest allocation in my portfolio.
Oh, is it? Autos is the largest. What else follows through? How are you looking at BFSI? How are you looking at some of the consumption plays, maybe the infra plays?
So on the consumption side, if I look in my portfolio, that is the largest allocation, and that will be followed by BFSI. Now, within the consumption, auto and auto anchors, that is the lion's share in my portfolio. So I'm betting both on the CV cycle, I'm betting on the two-wheelers, I'm betting on the auto ancillaries. And that is where I would say the growth is definitely defining the broader market. And beyond the autos, I'm betting on the new age companies, I'm betting on, I would say, a couple of the consumption stocks. But on the BFSI side, my biggest holding is again the PSU banks, and I've been a big fan of the PSU banks for a long time, and that continues to be the top holding in the BFSI allocation. And yes, apart from banks, I would have the equity marketplace, NBFC also, and I think we are seeing a good pickup in the appetite for the private capex in the economy, and I think that is where the bank lending growth will also start picking up.
Anirudh, how closely do you track energy, you guys as a team? Because I was looking at US cracks, for example. There are some crazy spikes there. Could this be beneficial for some of the refining companies, even though crude availability currently might be a bit of an issue for likes of MRPL, but Chennai Petro and some of the others, could they benefit?
No, Neeraj, unfortunately, we don't track the energy space, and OMCs is something I've always avoided because of too much of uncertainty on multiple factors. So I would not be able to comment much on that.
Fair call. Okay, let's leave that out. Do you guys track metals? Because aluminum has gone off the ramps quite substantially. Some of the other base metals too have rallied, and this follows what has been a substantial year of 2025 in terms of price moves. Are these, instead of being cyclical investment ideas, becoming a bit structural, or is it too much to say?
No, I think you have put it very aptly. I would say that metals was always seen as a very, very kind of a cyclical short-term play. I think what we are seeing the current metal cycle, it's not very short term. It's it's not a long term play, but it's a medium term play, and hence we are betting both on the ferrous as well as the non-ferrous, because I think a lot of economic activity, I would say a lot of demand supply mismatch is kind of going to see the impact on the metals for maybe a couple of more quarters, and hence we are definitely quite bullish on the entire space. It's not a core part of the portfolio. We have a core and a tactical. It's more a tactical part of the portfolio. But as I said, it's more kind of the medium-term play and not a very short-term play.
Okay. Medium-term play and not a very short-term play. But sorry, just to distill it further, between ferrous and non-ferrous, are you constructive on one, more constructive on one over the other?
On the non-ferrous.
So is it aluminum? Is it copper? Is it zinc? Is it silver? Where does the favor come?
So it's a mix of all of them. So I have the zinc and the aluminum.
Okay. How are you looking at IT, Anirudh? Is it the contrarian bet? Is it any kind of a play right now? Valuations looking attractive to you?
The last part is yes, valuations are looking attractive, but I would say valuations are looking attractive only compared to its own past, but not to the rest of the world's IT companies. In all my earlier interviews on your platform, I've mentioned I continue to remain underweight on IT. As I speak, I don't have a single IT stock in my portfolio. And yes, the valuations are attractive, but I would want to wait for some signs of earnings pickup to justify the valuations which they are today. So it's not that everything is looking bad. There are pockets which are looking good, but yes, I would say the pockets which are looking good, there the valuations are expensive. And the pockets which are not looking good, there the valuations are not expensive, but earnings are not there. So I would say broadly, for me, IT remains an avoid as of now, unless we see some signs of earnings pickup.
I wonder what are the scenarios you're painting right now, Anirudh? Because with the kind of tone that we've seen in sentiment, is your sense that maybe now the worst is over, or we're going to have another volatile and jerky sort of trade for the next few days? What are the various scenarios and options that you're painting right now? Is the view more of preservation of capital or looking for opportunity?
So I would say, as I mentioned, so March will go by like this. I don't see a big up move in the month of March, practically because of all these geopolitical events, along with the year ending, the long-term, short-term adjustments, everything. So I would say March, definitely, I'm not looking at any big upside from where we are today. But having said that, even the downside looks very, very capped. Because I think whatever bottom we made on the day the attacks happened on Iran and the subsequent attacks which happened in the entire Middle East region, I would say that is kind of the worst which you can see in the market. Because if you have not broken those levels, even on a day like that, definitely there are definitely the buyers in the market at those levels. So I would say March will practically go where it is today, up and down a couple of 100 points here and there. But I would say I am more constructive on the buying side because I see good valuation comfort. And when I say valuation, I'm looking at the PEG ratio, because when I look at the PEG ratio, interestingly, my portfolio PEG is at 0.85. That gives me a lot of confidence that, earnings are definitely way ahead of what the market is pricing on the P multiple. So that is where I would say I'm a buyer in the market in this month, giving a lot of confidence in different sectors, as I mentioned. BFSI or the consumption, in fact, even industrials and capex. A lot of industrial stocks have been beaten down because of their exposure to the Middle East. I think, yes, there will be some short-term impact in this quarter on the earnings, but you're getting them at good prices, good valuation for a medium to long-term perspective. So I would be a buyer in the market.
Okay. Anirudh, one question. I believe your portfolio, from what little we understand, peppered with a decent mix of the SMIDs as well, the mid caps and the small caps. A lot of small caps got decimated, but there was an earnings recovery seen in Q3. If you presume that could be extrapolated, are you putting in incremental money more towards the small caps or more towards the large caps?
I'm biased towards the small caps and mid caps in a big way. And I've been telling people, if you want to make money for the next 36 months, use this time to buy into good small and mid caps. It's not that you should avoid large caps. There are good large caps also. But as of today, my portfolio would have around 34 to 35% into the large cap, and balance would be into the small and mid. So that shows my biasness towards the small and mid. The main reason for being biased towards small and mid is valuation comfort again. If I look at the PEG ratio for the small cap index vis-a-vis the mid cap and the large cap index, it's interesting that the small cap index PEG ratio is much lower compared to the mid cap and the large cap index. Now that gives you comfort that the earnings pickup is much faster there. In fact, if you look in this quarter numbers which went by, I think the small cap index, hands down, they outperformed the large cap and the mid cap on the earnings front. So I think that is where, in fact, you mentioned about a lot of stocks being beaten down. It's very interesting to see that there are many good small caps making fresh highs in this market. I'm sure you would also be looking at those companies. So there are many good small caps making new highs in a market which is beaten down and a lot of panic is there. So that is again boiling down to what you buy in the small cap space. And I would say from where we are today, I would remain biased towards small and mid cap because that is where earnings recovery is much faster.
And that's also where the biggest hit took place. Thank you so much, Anirudh, for speaking with us. Always a pleasure having you on. That was Anirudh Sarkar, co-founder and CIO of Equinova Investment Managers. It's been quite a morning. And I just want to pull up the India VIX, before we close off the show, because it's a good gauge of the sentiment right now. And you've seen a sharp drop over there. Remember, this index has gone up some 20-25% in the last couple of sessions. So the volatility fears are coming down to some extent. I don't know, Neeraj. I think that we may not hold up another 150 points, and the next bad bit of news could see a sharp pullback. But the initial reaction to what we've seen in the last 2 or 3 days is done for now.
Okay, quick
It'll be
30 seconds.
incremental from here.
Because you track this so closely, right? In your history and experience of tracking geopolitics, does this seem predictable to be short-lived? This conflict?
No.
That should give an answer, right?
It's not predictable to be short-lived because there's just too many moving parts that have gotten involved. The involvement of Turkey for some reason, Cyprus, the French coming in and saying that they're going to send more stuff. But it's not full force, it's more statements.
Yeah.
This can move back very quickly. And I think what New York Times reported yesterday saying that the Iranians may want to talk is the biggest trigger. We can just wait and see what happens. But no point extending this further in terms of any wins for either side.
Agree completely. Agree completely.
So the case for pulling back now is stronger for the people in the fight. That's the only point I'm making.
Well, hopefully it happens because it's great. Forget the market, it's just great for it to happen per se. But I wonder, Tamanna, so many people have made this point that now the sharp downtick of 1,000 odd points that we've seen, barring today's uptick, of course, bakes in some of these negatives. And I wonder if that is indeed true, because if oil, as it showed this morning, flares up again, the rupee were to depreciate again, maybe not all of it is baked in.
Not all of it is baked in, but then what can go wrong from here on incrementally becomes less.
Yeah.
Let's wait and see. All right, that's all the time we have on India Market Open. Thank you so much for joining us, but stay tuned. Ask Profit up next.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The speech that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी, jingle, 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 jingle. बस आज का jingle, 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 jingle. चल करें थोड़े single, 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 single. क्योंकि तू है single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me is Mahima Vachhajani, and over the next hour or so, Mahima will try and solve all these stock-related queries as well. But before we do that, a lot more, let's quickly take a look at how the markets are doing, because very, very important session today. We got some cues yesterday from the European markets, some cues from the American ones that we could have a decent start to today's trading session. And while we fizzled out, so let's look at the heat map for the Nifty 50, and that'll give you that perspective in terms of where we started off. We were over 100 points. Come back to we will come back, of course, to the 78 to 80 point level, but shows you the perspective of the markets today. When you look at the key winners, Mahima, though, largely over the last few days has been on the oil and gas space. ONGC, Oil India, has dominated the news flow, so has Tata Steel, and largely continues to be that those stocks likely and largely flat today in today's trading session. So continues to be a very interesting juncture where the markets are, because you've seen yesterday that there was profit booking in those counters, but largely today you see those individual moves continuing to dominate the news flow.
I think on the the overall look, if we take at the look at the Nifty 50 right now, you have a lot of these counters which were trading with a lot of cuts yesterday in the green. So that's a sigh of relief for sure with regards to where the benchmarks go. The broader end of spectrum, if you can try to pull up the mid cap 150 and the small cap 250 as well, is kind of showing some relief as well. The mid cap 150 is up 0.7%, slightly doing better than where the benchmarks go. The mid cap 150 also trading around 0.5% higher, but still not making up for the kind of loss that we've seen in the past couple of days. So we'll have to wait and watch out for as to how that recovery happens over the course of next few odd days. So that's with regards to where all of these numbers go. But with that, let's also welcome in our guest for the day and start with our queries. We're joined by Mr. G. Chockalingam, founder and MD of Economics Research. And of course, since it's Thursday today, we're joined by Kush Bora in the studio as well. Welcome to both of you gentlemen and a very good morning to you. Kush, before I take on the queries, a quick take on the markets right now. Some relief is what we're seeing, at least in the green, is what we're seeing on the Nifty today. What is the kind of support and resistance that you're seeing?
So first of all, very good morning, guys, and it's a good day to be in the studio, right? And
sure.
on Ask Profit especially. But I think this is more of a relief rally. See, we all know the kind of drubbing that the markets had, a lot of stocks and a lot of sectors had. So some relief rally was around the corner. With the news flow not doing too much, we're getting that. Does it mean we're seeing any kind of a meaningful reversal from here on? Too early to call. So I wouldn't still be overly jubilant or excited and go out and buy the whole hog. Maybe stock specific trading can be done, but again keep your position sizes rather limited.
Okay. All right. So that's the view on markets. So we'll take up the first question, which is coming in from Suman, who's writing us from Kolkata, asking about ITC Hotels. She's got 530 shares at an average price of 200. It's almost 16% of her portfolio and wants to know if she should buy more, hold it from a long-term perspective. Mr. Chockalingam, a very good morning to you. Your view on ITC Hotels?
Short term, it may not give much return, but long term looks quite good. Price correction has happened. Now, PE also has shrunk to around 42. Of course, it is still stretched for the short term. But definitely, if somebody wants to hold it for beyond 1 year, it can give a decent return.
Got that view, Mr. Chockalingam, and welcome to the show. The next question, that's coming in, it's likely on and largely on Sagility. Now, our viewer from Mysore actually has bought into this counter and he had actually sold it at 46.5 Kush. And since now that there has been, that impact because of AI amongst other factors, he's asking if he can buy for bulk at this particular rate. Would you suggest that?
Puneet, at any other time, I would have said a blanket yes for this, right? I have been constructive on Sagility despite the kind of knockdown that it's seen over the last few months, right? But I still remain constructive. That 38 to 40 zone is a very strong support zone. But do you buy in bulk? That's the question. Bulk being the operative word here. Not the time or the situation to be buying in bulk. Do you nibble into this and do you reinstate some quantity that you had sold off? Yes, a part of it most certainly you should, but not buying in bulk. Largely, like I said, because of whatever else is happening with the world, not with the stock alone. 38 to 40, that's a strong support zone. Good point to start accumulating.
Okay, so that's the view coming in on Sagility India. The next one is on Asian Paints. Manju is asking this from and writing us from Amritsar, Punjab. She's holding 70 shares of Asian Paints bought at the levels of 2180. Wants to know if she can continue to hold or maybe sell and switch to some other stock. Mr. Chockalingam, I'll come to you on this one. There was a sigh of relief in the last quarter, seeing some uptick or at least some recovery in terms of where the volumes go. But now, because of crude prices, again, the coming quarters will be impacted. If of course this continues, right? What is your view on Asian Paints right now, considering the stock has taken quite a bit of a knock?
A time like this, one can consider selling Asian Paints and move to defensive stocks like Apollo Hospital. Apollo Hospital is insulated from the current ongoing war in all manners. Already the industry had a lot of headwinds in terms of two large industrial houses entering and creating additional capacity to the extent of 50% of the existing capacity. On top of it, now all of us know the oil price is shooting up and it's going close to 52-week high, which is definitely going to impact forthcoming results. So I would give a sell call and buy on Apollo Hospital.
Got the view, Mr. Chockalingam, but Vedanta is the next counter. That's a very interesting question on, and Sunil actually, for our viewer, is holding shares at 228. So he is materially into gains at this point of time. He's asking if he should continue holding Kush, book some of those gains that he's made. What would you recommend?
Why?
Why
book, right? Unless he's in need of money. Just seeing too many gains and being bored of that is a good thing, right? Don't worry about it.
We all know that.
Sorry?
We all know that.
We all know that. We all hope for that, right? So you're in an enviable position, Sunil. I would suggest continue holding on to Vedanta. Of course, there could be volatility, but on the whole, the metal pack has been one of the outliers. Vedanta, in particular, has been doing rather well. Even now, if you see the volume accumulation is fairly healthy in a market like this. So when you've got a stock that you've been holding on for such a long time, is doing well, the long-term trend still intact, I would suggest a hold. However, like I always do, I will suggest a positional stop, and that comes close to the 600-625 zone. If that is broken, this current rally could perhaps fizzle out. Not to say that, you know, that the trend changes drastically, but the current rally could fizzle out. So positional stop at the 600-625 zone.
Got that view, Kush. But the next question that's coming in is on Indigo, and we have been actually getting this question quite a while in this particular week. Mr. Chokalingam, Suresh from Kerala is asking if it's a good stock to look at now from a one-year perspective. How are you viewing, this instability essentially with the war and what it does to travel stocks, Mr. Chokalingam, at this point of time, and is it a good time to buy for the next 1 year?
I believe it is a good time to buy, airline leader like Indigo for a minimum 1 year time perspective. A, the price has corrected a lot, and B, I don't think this oil price spike is going to be a permanent phenomenon. The war, if any compromise is found out, the oil price is likely to crash. I'm putting it on record that it is likely to crash if there is any compromised solution is found out. Eventually, that has to happen. Otherwise, the way the market is living with the Ukraine war since 2021, that is also possible, and therefore oil can correct. So the risk is only if oil price goes above $100 per barrel. In case I go wrong and oil goes to $100, one can sell. Otherwise, I think it's a good buy because airline industry has got a lot of positive triggers in the domestic economy. And this is the most efficient among all the players. So I would give a buy call for medium to long term.
Okay, all right. So that's the view coming in on the aviation space. We've Sanjeevani calling us from Chennai. Sanjeevani, hi, a very good morning to you. What's your query about?
Hi, good morning, everyone. So my query was basically I wanted to get an idea of where we can deploy about 2 to 3 lakhs of capital in the current market scenario. Since it's been a little up and down, and considering the geopolitical situation that's happening, any stock specific or sector specific, that we can deploy for the next 1.5 years.
Okay.
So we can kind of capitalize on this movement.
Got it. Got your question, Sanjeevani. I'll take this up with Mr. Chokalingam. For the next 1.5 year, Mr. Chokalingam, where would you advise Sanjeevani to kind of park his money? 2 to 3 lakhs of capital is where he's looking at.
I would give a balanced view, of putting off in large cap, off in small and mid cap. So I like Apollo Hospital, ITC, Geo Financial, and HAL in the large cap. And small and mid cap, I believe Nesco, Bombay Burma, ISGEC, Bayer Crop Science. These are the 4 stocks I'm extremely bullish. Among all the stocks, we personally hold Nesco and Bombay Burma.
Got the view, Mr. Chokalingam, and thanks so much for those, some key stock picks in both the large as well as the mid-cap space. Hopefully, Sanjeevani, that answers your question. The next one that's coming in, Kush, and we've asked you this multiple times. I think we'll continue to on Ola Electric. A key stock there, Deepak from Mangalore actually holds 700 shares of Ola Electric bought at 50 rupees. He's asking now if he should sell it, keep it, hold it. What would you recommend?
If it weren't for the deep loss that he's making, I would have made it a rapid fire answer. I am not constructive on Ola. There is no reason to be, except for the fact that there has been, massive selling. The stock is oversold. It saw some uptick yesterday, some uptick in volumes also, by the way, not just price. So maybe some recovery could come about. But on the whole, not very constructive. A very objective answer to this one is exit. But if you want to still give yourself some chance because of the loss that you're already incurring, I would suggest hold it with a stop loss at 21. But like I said, any rebound in this should be taken as an opportunity to, exit out of Ola.
So sell on the rise should be the strategy for this one. All right. We've got Saraswati calling us from Bengaluru. Saraswati, hi, very good morning to you. What's your question about?
Hey, good morning, Mahima. How are you?
All good. How are you?
Good too. So I wanted to know about the BEL stock. So currently I have 450 and with average price of 449.
Okay.
And I'm profit of 3,000 to 280 currently.
Okay.
So my question is, should I hold or should I book the profit? I'm looking for a short term.
Okay, Saraswati, got your question. I'll take this up with Kush. Kush, BEL, what are the charts suggesting? She's already sitting on some profits. Should she wait?
Yeah, so it's a good trade, Saraswati, by the way. Even in the midst of all this, you've managed to find that one stock and that one sector that is doing well. So kudos on that. I would suggest continue to hold on to this one, right? Because amongst the entire defense pack, this is a lone star. This has been doing phenomenally well. Near-term momentum also positive. I would give you a technical answer also, but even from a trading strategy point of view, if you've heard me a few times, keep your buying price as your trailing stop loss right now, or maybe just over it. So 449 or 450 should now be your trailing stop loss, right? And you should continue to hold. On the way up, there is a resistance at the 460 mark. Even if you see the call option data, there is congestion around that 460 call option strike price. So there could be some resistance coming in. But if that is taken out in the recent rally, you could have a short covering rally that could come in and take the stock to 475. And that's when you keep trailing your stop losses higher. So for now, hold BEL, keep 449, 450, your trailing stop loss.
Got your view, Kush. But the next one that we're getting is another stock that we've spoken about quite a bit this week is on CDSL. Now, Mr. Chokalingam, a viewer, Nina, actually wants to invest 1 lakh rupees in this counter. Would you recommend her to do that or any other in that space? What's your view?
I have extraordinary conviction in CDSL. Personally, I do not own, but I like the stock a lot. So stock correction is a great attraction. And why I like is that it's a play on the capital market and there are 2 depositories. I don't think the regulator will go for increasing the number of depositories, considering the nature of the business and sensitivity of holding, 450 lakh crore worth of shares between SDSL and CDSL, which is very important to maintain this market structure, which will be favorable to the company. And every week, more than 7 lakh new investors are coming into the market and registering for the first time on BSE platform. That is also positive. So I'm very, very optimistic on the stock for a medium to long term.
Okay, all right. So that's the constructive view coming in on CDSL. We've got our next caller. Yogesh is calling us from Jaipur. Yogesh, a very good morning to you. How can we help you?
Good morning, Maji. How are you?
All good. How are you?
I am fine, very fine. Actually, this Holi is given a very good rainbow, but this rainbow is given only my red rainbow, red color rainbow.
That is true.
So this is opportunity for me. Actually, today I bought Gujarat Gas 392. This theory is for my कुछ हो रहा. Actually, I want to know कि कुछ भी क्या मतलब मुझे अगर इस रैली को मैं रहना चाहता हूँ तो can I hold for? I am investor for next 2 or 3 years. So what I do? मेरे पास 1000 बायर है, 1000 शेयर है मेरे पास 392 रुपए के. So what I do for that? That I want to कुछ बोरा.
ठीक है, Yogesh, got your question. And Kush, he's entered Gujarat Gas during a time when we're kind of facing the gas crisis because of Strait of Hormuz shut. But technically, what is the view on the charts?
अगर इन्होंने मुझसे मारवाड़ी में पूछा होता तो मैं शायद मारवाड़ी में जवाब दे देता. I think we have that common connect in terms of the places where we hail from. But नहीं योगेश जी, thank you so much for directing that query at me. मेरा सुझाव रहेगा कि आप गुजरात गैस से निकल जाइए. अभी भी इस स्टॉक में जो आज फॉल आई है, कल बहुत चल गया था, आज जो फॉल आया है उसके बाद भी अगर आप देखें तो आप अभी भी मार्जिनल प्रॉफिट में हैं, आपके कॉस्ट प्राइस पे है. मेरा सुझाव रहेगा कि एक स्टॉक जो मार्केट रैली में नहीं पार्टिसिपेट करता है उस स्टॉक में नहीं बने रहना चाहिए. इससे विपरीत, इससे बेहतर मैं आपको ये सुझाव दूंगा कि जो सेक्टर और जो स्टॉक्स चल रहे हों उनमें ध्यान रखें. और सबसे ऊपर उस लिस्ट में आते हैं पीएसयू बैंक्स. तो पीएसयू बैंक्स में जो ओवरहीटिंग हुई थी वो ऑलरेडी करेक्ट हो चुकी है. तो एसबीआई, यूनियन बैंक, बैंक ऑफ महाराष्ट्र, ये कुछ स्टॉक्स हैं जो हमने अक्सर इस चैनल पे डिस्कस किए हैं. मेरे हिसाब से बिकॉज आप अभी कॉस्ट टू कॉस्ट हैं, इट्स अ गुड आइडिया कि आप गुजरात गैस से निकल जाएं. स्टॉक एक मैसिव अंडर परफॉर्मर रहा है और आने वाला समय भी इसके लिए थोड़ा सा और मुश्किल वाला भरा हो सकता है. तो बेहतर रहेगा कि आप फाइनेंशियल में शिफ्ट हो जाए. हमारा प्रेफरेंस जैसे मैंने कहा पीएसयू बैंक्स होंगे इन दिस डिक्लाइन.
Got that view, Kush, and thanks so much for that, and thanks so much for keeping it in English and Hindi only for the benefit of our viewers. But we were talking about Gujarat Gas. Oil marketing companies are actually back in the red as higher crude as well as a weaker rupee are pushing the marketing margins sharply into the negative territory. Now, analysts are putting in that perspective and saying that the losses on petrol and diesel sales are mounting again, and it's important to get that perspective. So let me go across to Somit real quickly, who joins us with all these details.
On intraday basis, we did see a sharp fall coming in the share prices for the oil marketing companies, that is HPCL, BPCL and IOCL. And this is largely because analysts are now saying that despite the rise in crude oil prices, the fall in OMCs have been very limited. And if current level, if you see, at the current crude price level, if you see, oil marketing companies are incurring a loss of nearly 20 rupees per litre on sale of every litre of petrol and diesel. This is the gross marketing margin number that analysts are talking about. That's a negative rupees 20. Now this is largely because in the past few days we have seen a sudden surge in the crude oil prices, and we have also seen rupee depreciating, and both these factors have led marketing margins to the negative territory. Now before the war, margins were at around 2 to 4 rupees per litre on the positive side, but now with the surge in crude oil prices and rupee depreciating, this has come down drastically for the oil marketing companies. However, the exact financial impact of this could not be ascertained at this moment, but the gross marketing margins have turned negative of rupees 20. On the positive side, the Singapore gross refining margin that has surged back to around $25 per barrel. This is after the Chinese news that has come in, and given the fact that there is a less refined product available in the market. Singapore gross refining margin is the Asian benchmark for refining margin, that is standing at around $25 per barrel, and the Indian gross refining margin that is also trading around the $24 per barrel mark, and this is quite positive for Reliance Industries, Chennai Petro and MRPL as well.
Okay, so Amit, thank you so much for getting us those details. Mr. Oklingam, I'll take a quick question with you on this one. OMCs versus all these oil exploration companies. What's the holistic view that you would like to give us considering the situation?
One is making profit, they should sell them.
Yeah.
My strong view is that oil price is going to crack in a big way in medium to long term. If you look at even China, the service economy share has gone up from 42% to 57%. So all over the world, service economy is growing. Oil intensity in economic growth is coming down. OPEC Plus is increasing the oil supply. Renewable energy has taken off in a big way in Europe and China and India. And so the moment you see some resolution to this ongoing war, oil price is going to fall badly. So therefore, I would be a seller of all these stocks now.
Got that view, Mr. Chokalingam. But the next question that's coming in, questions on Usha Martin. A viewer, holds roughly shares, 100 shares at 460 and asking a 3-month view. What would you recommend on Usha Martin?
Would that be 460, 460?
460, yeah.
Okay, so right now the stock is in a downward sloping channel, and it has been, if you see, since October last year, right? Any rise, towards that channel has been sold into. So while I remain a little constructive in the sense that, there is buying and there is support at the 200-day moving average, which comes close to the 395-400 zone, a massive up move in this will perhaps take time. So I would suggest a hold approach. There would be, a gradual recovery if this 390-400 zone is held, and as we've seen, that the buying is rather massive when it comes to those levels, and test those levels again. So hold with 390-400 zone as your stop loss, but don't expect a massive, upswing or a massive V-shape kind of a recovery. The turn could be gradual, and I think around your price there is a resistance, so maybe you'd want to exit close to your price, not in a very big profit.
Okay, all right. So that's the view on Usha Martin. The next question is on Poly Medicure. Mr. Patrudu is writing us from Visakhapatnam asking about this counter. He's got 50 odd shares, wants to know a view on fresh buy at the current levels from a medium term perspective. Kush, would you recommend that? The stock is down by about 3% as we speak.
Has he masked his query, just to put it out that he's not averaging it? Has he masked his query that way? Because if he's a regular follower, he knows I'm going to say no to averaging right away. But no. There are certain cases when averaging makes sense. Poly Medicure right now falls in that case, and let me tell you why. If I were to deploy fresh 100 rupees, would I buy Poly Medicure right now? If the answer to that is yes, then you average. Right now, Poly Medicure fills, fills those boxes, ticks those boxes, and hence I say the stock's been a massive underperformer. No two ways about it. But now you're starting to see, volume upticks at lower levels. You're starting to see positive RSI divergences on weekly. It's oversold, so it's got a few things going for it. So yes, I would consider Poly Medicure as a fresh allocation, or in his case averaging, but a tight stop loss at the 1240, 1250 zone. If that is broken, this rally could fizzle out. If not, the risk reward ratio from here on is very attractive.
Got that view, Kush. But time now to take a deep dive into the BSE F&O setup for today, and Sharad is joining us for exactly that. Sharad, over to you.
Well, after 3 days of stress, we are seeing some kind of a good moves coming in. But remember, today's Sensex expiry also at play. You might see volatility in the last hour of trade as well. But looking at the numbers, is pretty strong. NTPC, Reliance holding the fort. Even Tata Steel, you're seeing a good reversals happening. Kind of a sell-off little bit continuing for IT. It's like a reverse trend, but net the technical level bounce which has come in for Sensex and even BankX, that is strong enough. Let's just see how the BankX is performing. Slightly, you could see a bit mixed performance because SBI is not supporting, but HDFC Bank and even Bank of Baroda stocks are doing well in trade. But of course, stock-specific moves coming in. And a long build up for Mazagon Dock and Nalco. Remember, most of the metal stocks are rallying in trade, and this is because, of course, the impact of the geopolitical tensions also coming in. Let's look at the short covering candidates, and this includes ONGC on the rise of higher Brent crude prices, and even Bharat Dynamics as the defense pack also is seeing a good buying. Long unwinding for Bosch and Godrej Consumer, not a good trade to be made, to be honest, in these two stocks. So if you look at the key short build-up, that is TCS and Swiggy. Interesting, Swiggy saw good recovery last trading session, now again in the red. So we'll be looking at these stocks as well. But extremely stock-specific moves is something you should be watching out for as we are there on the Sensex expiry today.
Thank you so much for getting us those details. But with that, it's time for our first rapid fire round of Ask Profit. Kush as well as Mr. Choklingam, try to keep your answers as short as possible. The first one is on L&T, and Udit Guru is asking this question. He wants to know if you can continue to hold this counter from a long-term perspective. Mr. Choklingam, your view.
Yeah, I maintain a buy recommendation on L&T.
Lalita is asking a question on REC. She's bought it at 354, currently sitting on a loss. Kush, should she continue to hold?
Exit.
Okay, Lemon Tree is the next one. Biswajit from Kolkata wants to know if this is a good time to buy for the next 2 years. Mr. Choklingam?
I prefer East India Hotel to Lemon Tree.
IRFC bought at 100 rupees, Kush, 78 shares. Would you consider letting her buy more right now at this point of time?
No, most certainly not, but you can continue to hold with a stop loss at 95.
Kirloskar Oil Engines. Can this be a good buy right now for the next 3 months? Bipin from Kochi is asking. Kush, your view?
It has been a buy on our advisory, continues to remain so. My answer is yes. I would suggest a stop loss at the 1350, 1365 zone.
Would it make sense to dabble in Petronet LNG is what Anil is asking, Kush. He's bought the shares at 320 rupees. What would you suggest?
No, I would suggest an exit.
Okay, so Zlon is the next one. Our viewer wants to know if this is a good hold, buy or sell. Mr. Choklingam, your view?
It's a good to buy for medium to long term.
Mr. Choklingam, Guru is asking if it's a good time to buy Andhra Cement right now. You've seen a correction across the space now. What would you recommend?
I'm sorry, I have not analyzed the enterprise value per ton of cement, so I'm not able to give view on it.
Okay, this is an interesting one for you, Kush. Hindalco, an intraday position. Would you advise that?
Hindalco an intraday trade?
Yes.
Well, stock at the day high, you could consider tight stop loss at 970, 990, and then a little over could be your targets.
The next question that's coming in is on yet again IT, TCS, 3391 rupees per share is what our viewer Ayan holds, roughly 21 shares. Mr. Chokalingam, is it a good time for him to average now?
I will not make aggressive buy on any large IT stocks.
Got it. Well, that's the end of the rapid fire as well as the first round of rapid fire in this edition of Ask Profit. But a lot more stock related queries on the other side. Stay tuned to Ask Profit.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी जिंगल 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 बस आज का जिंगल 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 चल करें थोड़े सिंगल 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 क्योंकि तू है सिंगल 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 baby I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
I'm being joined by the promoters, Mr. Uday Kumar Parekh, he is the chairman and managing director of the company, as well as Mr. Paras Parekh, the whole-time director, as well as chief financial officer. Gentlemen, to both of you, thanks so much for joining in. Firstly, many congratulations for this momentum occasion in your company's history. I just want to quickly start off with the space that you operate in. It's very interesting in that space because going into very specific components for your clients, as well as the need for technology being so high, and it's a very evolving space in India at this point of time. Could you give us some perspective about the company as well as the reason for going for listing at this point of time?
Yeah. So first of all, thank you, and good morning. So it's a very good question. So we are into the precision engineering solutions providers to the large energy, motion control and automations and industrial equipment divisions. So if you see overall these segments, large OEMs and multi-billion customers, they are all procuring the precision engineering products and assembly and services from the worldwide global supplier base. So that's our primary business. And coming to the overall segments, so energy segments, motion control and automation side and industrial equipment, that all segments are pretty growing business in terms of international market and domestic market. So we are extremely bullish about that. So coming to the IPO proceeds and going into the IPO, as we are expanding, we have grown around 30 to 35% of the CAGR growth in last 4-5 years, and we are expecting some of the growth trajectory in the coming years. Apart from that, we have a strong order book that we have to fulfill into the coming years to the customers, and again we have a 90% plus our repeated customer base, so that is giving us very good insight for a further investment, and for doing the large investments we have come for the public IPO.
Got that view, Ms. Parekh, and largely then, continuing what you mentioned, because you are repaying almost 50 crores in terms of borrowings, but almost in 2 tranches you are setting up 2 proposed facilities as well, by investing roughly 230 odd crores. Now I wanted to just understand what's the company's current capacity utilization, as well as in these particular plants, will you be continuing the products that you are already making, or will this be new avenues of growth which you will be targeting?
Yeah, so in our present facility, which we have started in April 24, that plant have utilization is around 65%. So in the FY27, we are going to utilize that capacity, spare capacity from our existing plant. From the little bit on the IPO proceed, we are investing in our existing plant also. That will increase our capacity, which will help us to grow in FY27. And whatever the new 2 facility we are investing, that will give us start effect in the FY28.
And at this point of time, when I was looking at your financials, there's a very big jump that you've recorded in FY25 in terms of revenue growth. FY24 was largely flattish. Is that largely the reason that you've just mentioned for the flattish growth that we've seen in FY24? And going forward, what could be some of the run rates? Because the growth that you're projecting, as well as the size of the industry, your growth should be quite higher compared to what we've seen with your peers as well, which operate in the mid-20s to the high 30s in terms of growth. Is that something that you are also targeting?
Yes, exactly. So in these segments, our peers are also growing in the pretty good growth rates, and we are also, if you see over FY22 to FY26, we are also in the CAGR growth of more than 30%, and we are expecting by for next few years, we are expecting for these growth rates. And if you see, our peers are also doing the same thing.
Okay, so that was the management of Omni Tech. The stock currently trading with cuts for about 6.8 odd %. But I mean, in these markets, even this is not a bad situation. But speaking of markets, there is a recovery that we've seen. The Nifty 50 is now up by about 0.7 odd %. So now around almost 170 points of an uptick is what we're seeing on the Nifty 50. The Bank Nifty is also seeing an uptick of around 0.5 odd %. And overall, if you can try to pull up the broader markets and see if there is further recovery in the broader end of spectrum as well. The mid cap 150 and the small cap 250. Not much. The mid cap 150 is still trading above 0.7 odd % and the small cap 250 around 0.5% higher. So that's with regards to where the markets go. But the next query that we have is on Moschip. Mahesh he says from India is writing in. He's bought 250 odd shares at the levels of 218. He wants the near-term outlook for this particular counter. At what price levels should I kind of see the support and resistance for this one? Kush, what's the view like?
So the overall structure is not looking too exciting. However, there was some sort of a recovery attempted just before this fall started this week, on the back of the news and the war escalation. There was some consolidation that was going on. But like I said, the broader trend, the medium-term trend is still downwards. As far as the support goes, I think 165, that's a good support zone. And on the way up, major resistance comes in the 190 to 195 band.
Got that view, Kush. But the next one, Mr. Chokalingam, coming your way on Bank of Maharashtra. Now, I know it's a stock that you've liked in the past. Venkat Ramani is actually directing this question to you. Holding 530 shares, bought at 41. Now, he's asking if he should, continue to hold this particular counter? Is it advisable to buy more? Would you suggest that time has come to buy more, Mr. Chokalingam?
Since the stock has moved up quite significantly, we have revised our buy target to hold target, and therefore I would maintain the hold, and I would prefer to give buy call on Central Bank of India. At current price, it is trading at 10% discount to adjusted book value. I find it very strange, and the bank has improved both the business growth, quality of assets phenomenally in the last 5 years. So I prefer to give buy call on Central Bank of India.
Okay, all right. So that's the view coming in on Bank of Maharashtra. But the next question that we have is from Sagar, talking about Hindalco. He's bought 12,400 odd shares at the levels of 136. So he's bought at really attractive levels, and he's sitting on a profit of over 1 crore rupees. So kudos to that, Sagar. He wants to know as to how much more steam is left on the upside for this particular counter, and he's also kind of done his research very well, because he's saying that fundamentally global commodity prices have been in a rise. Kind of whether it's war or not, we've seen this because of entire geopolitical uncertainty, right? What's the outlook for this one? What should he, consider doing right now with something like a Hindalco? Mr. Chokalingam, your view?
I would give a short-term hold because aluminum prices are looking good. Yeah. So one can continue to hold in the short term.
Got it, Mr. Chokalingam. But the next question that we're getting now, it's from Manav from Gurugram, and he's dialing in for a stock query. Manav, good morning. Welcome to the show. What's your question?
Hi, good morning to everyone. So today I have a query on Suzlon. So I'm holding approximately 150 shares of Suzlon at an average price of 58 for just above more than a year as of now. So I have no issues in holding it for a little longer, maybe 2 years or 3 years. But would it be advisable at this current juncture to average it down, or should there be some other strategy should I follow?
Got it. Mr. Chokalingam, would you advise Manav to average down on Suzlon? We've also seen a corporate update yesterday, them forming on an executive council, but what would you recommend for Manav to do?
Yeah, since I hold only research analyst license, I would give my research view on the stock. I would give a buy recommendation on the stock because renewable energy capacity build-up is going to be very strong, short to medium to long term. Only limitation is that the solar power growth is much faster than the wind power. But however, the stock price has corrected a lot. So therefore, it becomes quite attractive, Suzlon, at current price.
Okay, the next question is from Ganesh, who's writing us from Bengaluru. He says he's got 1 lakh to invest in for a year, and he wants to know if he can go ahead and invest this in E2E Systems or Power Finance 50/50 or any one of these. Kush, I'll come to you on this one. Where do you think that from a slightly long-term perspective, charts are more constructive? What would you do?
It's a tough one.
None of these.
Yeah, if that's an option, I would go with that.
Okay.
The reason being that we know why E2 is doing well. I mean, it's in the thick of things. It's in the middle of news flow, and it's done well. But you see, around that resistance zone of about 3,000 odd, that also fizzled out. And PFC, even REC for that matter, hasn't really done all that great. I mean, there was a recovery that was happening, but even that has met with resistance. If I were to pick one of the two, then I would still go with PFC, only because the margin of safety here seems to be relatively higher than E2E. But otherwise, I would say stick to auto names, stick to some of the PSU banking names that we have discussed. I would go with these. But like I said, between the two, PFC with the margin of safety angle seems a little safer.
Since you spoke about auto, but we also had a question of auto stocks to enter and invest roughly 2 lakhs. You have any names that you can recommend?
Absolutely. I think Mahindra & Mahindra has become very attractive after the kind of fall that you're seeing. The tractor sales, you would actually know a lot better on that. Has done well, all of that. I think Mahindra & Mahindra is something that you should consider on declines right now, for sure. From the auto space. Also, Bajaj Auto. This one's had a very steady up run. Every time it dips close to the 20-day and the 50-day moving average, you see some kind of recovery. Yes, it's dipped with the market, so that actually presents a good opportunity. So if I were to pick the two names, from one each, then it would be Bajaj Auto and Mahindra & Mahindra.
For Mahindra, do you think that this level, because we saw buying from this level actually the last time around from 3300. Now war-led effects or whatever you might call it has led it to come back to this level. Do you think this is now a level that it could see that support being built in?
Absolutely. The daily setup has an RSI positive divergence, which means the last time around it was a 3300 versus now the strength in this dip is actually more, in the sense that the strength in the stock is more. So it is suggesting that this could perhaps be a near term bottom. Of course, war escalation could take any stock anywhere, but just on pure technical basis, right now it's on a good footing. This would be a good time to consider Mahindra & Mahindra for an entry.
Got that view, Kush, but time for a very, very short break. A last 15-minute stretch, viewers, to send across your queries and we'll take all of them. Stay tuned to NDTV Profit.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब डेट पे हमला होगा तो तभी। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी, jingle, 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 jingle. बस आज का jingle, 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 jingle. चल करें थोड़े single, 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 single. क्योंकि तू है single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your auto.
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send your queries on the WhatsApp number that's flashing on your screen up there. We've got Bharat calling us from Vijayawada. Bharat, a very good morning to you. What's your query about?
Good morning, Mahima madam. I am buying Quality Power 500 shares at the price of 916.
Okay.
So what is the price? What is the target of 3 to 4 months target of this price? And I will talk to Kush Boha, sir.
Sure. Kush, this question is directed towards you. He's sitting on a loss of 61,000. What would you recommend?
Sure. So first of all, thank you so much for directing the query at me. The stock has been fairly volatile, mind you. If we exclude the last 2 weeks, though, there was a very good recovery underway and on the back of very good volumes. So, a little disheartening to see the loss that he's making. But in times like these, the stocks do take a knock, even good ones. My suggestion would be continue to hold. 750 is a good erstwhile resistance zone now will act as a support zone. So keep that as your stop loss. Continue to hold. My concern is on the upside though, Bharat. On the upside, 900 to about 920, that's been the resistance zone where the stock actually spent a lot of time, about 5-7 trading sessions, and then fizzled out. So if it does come to your price, you might want to shave off some quantity, not exit completely, but at least shave off some quantity, because that's the resistance zone. If that is taken out on the upside, then you've got targets of 980 and 990 that could very well play out. So hold with a stop loss at 750, partial exit at about your cost price, and then you could hold the rest for 990.
Got that view, Kush. But a short-term query coming from Nitya now, and she's asking on Tejas Networks as well as on Canara Bank. Now she's asking if it's a good time to buy into this and invest 1 lakh rupee each. I know Canara, much more stable name, Kush, but what would you recommend?
Yeah, so incidentally, Puneet, Tejas is something that Alex and I have been discussing for the last two sessions in the morning show and the opening show, right? If you were a holder, then you would have held on to this one for a very long time and at a very high price. So right now this is more of a recovery mode for Tejas, and hence I don't suggest a buy. Even from a very near-term perspective, if you're looking at a fresh allocation, as is the query, the stock is already overheated. So maybe some dip close to the 450-55 zone could perhaps present an entry, but I wouldn't really focus on Tejas just yet. Canara Bank, definitely, like you said, a much more stable name. The overheating in PSU banks cooling off, and 145, that's a good support zone, so it's already close to that. So if you want to consider Canara Bank over Tejas Networks.
Okay, all right. The next question that we have is from Tulsi, who's writing us from Hyderabad, asking about Tata Capital. She's bought 46 shares at the levels of 326. She's saying the stock is pretty volatile. Can she continue to hold or sell? Mr. Oklingam, I'll come to you on this one. What's the view?
One can hold for minimum 2 years because it is trading at around 3.4 times price to book value. In my view, that is a fair valuation in the short term. So anywhere minimum, at least beyond 1 year, it can have some potential, because we know this industry allows can support consistent growth of this financial service company, but short term most unlikely to give any attractive return.
Got that view, Mr. Chokalingam. But the next question is on Black Box now. I don't know, Mr. Chokalingam, if you track this counter, but Aniket was asking if it's a good time to invest for the nenext 4 years. The counter was also in focus on the back of an acquisitions, but do you cover this counter?
No, I never studied it.
Kush, any quick tech check on Black Box? Any view?
Yeah, not something that I track regularly, but right now it seems to be in a consolidation mode. On the downside, you've got supports at the 475 zone, and on the upside about 575, so about 100-point range that it's trading in. So, could be a range play, but not something, like I said, I track very closely.
Okay, the next question that we have is from Harsha, who's writing us from Vijayawada, asking about Bharat Forge. If this is a good time to, kind of make an entry from a long-term perspective. Mr. Oklingam, your view?
Okay, well, all of us know, but valuation is not great enough to attract, in my view. I would give a sell call on Bharat Forge, and I would, buy something like ITC or Apollo Hospital.
Got that view, Mr. Chokalingam. But the next caller, actually dialing from Mumbai now, and Vivek has a stock query for us. Vivek, good morning. Welcome to the show. What's your query?
Yeah, good morning. Good morning. So this is a query for Kush, and this is technically. If you can make a recommendation on the small cap and mid caps, any very good stocks which are technically at 2023 levels, 180 DMA, where he thinks that this can be a great buy technically at this level for a long term.
Got it. Thanks for your question, Vivek. Kush, what would you recommend?
First off, thank you, Vivek, for directing the query at me. I'm a little. I would perhaps want a little more clarity. The price point he mentioned, is he looking at a particular price point for a stock, or is
no. Basically, like what Mr. Chokalingam just mentioned, when I checked Suzlon, so it's available at a very good price. So similarly, if but Suzlon is a very popular stock. Any 4 or 5 stocks which you would like to recommend, which I can keep in my list. Where as the prices come, and I'm basically looking at November 2023 levels. somewhere around that, you know.
Okay, that was the difference. Got it.
No, थोड़ा अच्छे स्टॉक बताना please.
विवेक, कोशिश तो सारे ही स्टॉक्स अच्छे बताने की होती है और सारे ही अच्छे ही बताते हैं. But no, I hear you. I will recommend a list of stocks. You could definitely keep this on your radar. You would have heard me recommend these, on the channel multiple times. RR Kabil, Thangamayil, Union Bank, MFSL, Max Financial, and Kirloskar Oil. These are the 5 stocks that I feel at any declines should be added. They've had their share of correction. Some of them have actually had a fantabulous run, and any kind of decline should be taken as an opportunity. These war-like situations do present an opportunity to get in. Thangamayil was something that we recommended very recently. Yesterday, it had a very sharp round of profit booking. If you're not holding it, then I suggest this presents a fantastic opportunity. Same applies for the likes of RR Kabil also. So just to repeat that list: RR Kabil, Thangamayil, Union Bank, MFSL, and Kirloskar Oil.
Okay, all right. Thank you so much for that, Kush. The next question is from Satyan. I think we've made sure that we ask at least one query from Satyan in the morning or the afternoon show, and he makes sure that he always asks a combo view. So Satyan, you have to next time just ask me one stock query, but this time I'll make an exception for you. He's saying that he's holding DLF at the levels of 620 since a few months. He's saying that there were kind of adverse news plus technical breakdowns happening. Do you think this is the opportunity to kind of add more in this counter or switch to something like a Nesco from a slightly long-term perspective? Mr. Oklingam, I know that you're constructive on Nesco, but overall a holistic view on his query?
Both are similar businesses. DLF also has a good land bank, but I have a bias for Nesco, not that because I am holding it. As a professional, I am extraordinarily convinced in Nesco. I may be wrong. Weaver has to take his own view. I am positioning this stock as a next generation stock for last 13 years. I initiated this stock about 13 years back. I continue to maintain that it's a great wealth creating stock, but I have invested, company invested, my family invested. So I request viewers to consult their own investment advisor before listening to my judgment.
Well, got your view, Mr. Chokalingam, and thanks so much for that. But viewers, time now for the rapid fire round in this edition of Fast Profit as well. Let me actually go across and take a query that we had on call, but we couldn't go to the call because of time constraints. On Natco Pharma, 800 rupees per share is what our viewer had bought. Mr. Chokalingam, your view?
One can hold it at current price.
Okay, Eternal is the next one. Srikanth from Hyderabad is holding 2,000 shares at the levels of 60. Would you advise him to continue to hold from a long-term perspective, Mr. Oklingam?
Stock name, please. I missed
Eternal.
Long-term, I am negative.
The next question is on Texmaco. Actually, Kosh bought at 159 by our viewer. Should he continue to hold or average or sell?
Sorry, what's the buy price?
159. So much above.
Yeah, no, I would suggest an exit.
Okay, Shriram Finance is the next one. Satish from Bengaluru wants to know if he can sell the 100 shares that he purchased at the levels of 780. Kush, would you recommend that?
No, you should continue to hold. Keep a stop loss at 990, 985 zone.
Birla Soft Kush, Srikanth is holding at 450, and it's been since 2021. Should he continue to hold or average down? What would you recommend?
No, don't average, but hold with a stop loss at 360.
Nalco is the next one. Manu from Abu Dhabi is writing in. I hope he's safe. Is this the right time to buy Nalco, Kush?
Hold up just a bit. If it crosses and closes above 400, that's when you consider.
The next question that's coming in is on Raymond Realty. Bought at 770. Now, is she asking a short-term view on this stock? What would you recommend, Kush?
Hold with a stop. Yeah, it's negative, but there could be a rebound coming about. So hold with a stop loss at 385.
Okay, Dixon Tech is the next one. Mehul from Bengaluru wants to know if this is a good time to enter from a 2-year perspective. Mr. Oklingam?
With a little risk perspective, one can buy for long term.
Tattva Chintan bought at 1325, Mr. Chokalingam. Should our viewer Rajesh continue to hold this counter?
Fundamentally, I am not comfortable. Maybe tactically one can hold for some recovery.
Okay, Sriram is asking this question. He says he's 100 shares of Himadri Specialty Chemicals and wants to hold this for the next 20 to 25 years. Do you think that's the right thing to do, Mr. Oklingam?
One should have that perspective, but every quarter one has to review it. It's a hold or even buy for medium to long term.
Okay.
Mr. Rao is asking a question. Eureka Forbes, Mr. Chokalingam, do you track this counter? A view, what could be the key expectations?
No, I have not studied recently.
Okay.
Okay, Whirlpool is the next one. Dina from Coimbatore wants to know if this is the right time to buy. Kush, your view?
No, I'd avoid.
UPL bought by Nand Kumar Kush at 650. It's gone through a corporate restructuring, but what would you recommend in a short-term view?
Exit.
KPIT Tech, can I average from a 1-year target perspective? What is the view on the charts, Kush?
Wait up just a little more.
Okay, all right. So that's about it. We're completely out of time on this edition of Ask Profit. Mr. Chokalingam as well as Kush, thank you so much for taking all the time and helping us answer those queries. Yet again today we've hit the 60 mark. We'll see if we're able to take 40 more questions in the afternoon edition. So do stay tuned and go ahead and ask your questions. But like I said, completely out of time. KYC up next. Do stay tuned.
True love is lifelong, isn't it? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब डेट पे हमला होगा तो तभी। आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी jingle, 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 jingle. बस आज का jingle, 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 jingle. चल करें थोड़े single, 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 single. क्योंकि तू है single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Of course, a lot of readers keep writing to me on KYC to get in newly listed companies as well. Of course, the track record is on the lower side, but nevertheless, we get you these companies. But I'll give you some hints before you can guess the company. Let's put out the hints. The Media Solutions SaaS company, software as a service company. Of course, recently SaaS companies have taken a derating after AI has come. But will this company actually come up with something surprising? that's something to look out for. The second hint is it was listed just last month itself, January 21st. You can see just more than 1 month now from 2026. It's a very recently listed company, and we'll go into more details about it. The third important hint is the stock is still in a really bad market or a volatile market. It's up 19% from listing price. That is really strong as well. So these are the key hints I would like to focus on. But remember, General Atlantic, Premji Investment, this is of course the private family office of Azim Premji, and you see a very strong backing coming for this company. Very interesting. Also, a couple of more hints is a lot of live events which you have been seeing. The company has been, at the back end of it, be it Grammys, NFL, and a lot of sporting events as well. We'll get to that. But the company in focus is Amagi Media Labs. That's what I am talking about here. And it's just been 1.5 months since it's listed. So we need to delve deep into the company, what it actually does, and is the street actually giving the valuation which the company deserves or not. But why are we calling this company? Let's ask the important questions. The first one is, of course, AI. Is it a friend or a foe when it comes to infra SaaS? We have seen what has happened to the SaaS companies, but is the company having a moat? Has the company been discovered by Dalal Street that it is a bit different than others? That's what we'll ask the company. The Q3 adjusted EBITDA margin, that was 14.3%. Will this sustain going ahead? How does the margin profile work of a media SaaS company? We'll ask all these questions to the management. The capex plans for AI investments. What's the strategy ahead? Management was bullish in their Q3 con call as well. So will they walk the talk or not? And if yes, what will be the amount for the capex investments? Kharch kitna hoga AI mein? Let's talk about the other important factor, and that's the media entertainment ecosystem. What are the key growth triggers looking like? Everyone is also migrating from the cable to the digital space as well, and this company is playing a very very pivotal role actually in this segment as well. So it will be very interesting to catch about this and the demand trends in the client confidence, especially in the non-US market side, because US side concentration of revenue is definitely on the stronger side. But how does the company expand in the European markets, in the Asia Pacific markets? All these questions will be answered in KYC, so stay tuned for that. And the AI usage, any kind of incremental benefits which are coming in, and if yes, can it be quantified? Interestingly, the management has also spoken about that fixed cost component. That's almost 2/3 of the total cost. That means revenue has a better upside potential, and of course the new product categories, because they are concentrated totally in this media and education entertainment. And to give us all the details on the show, we'll have Bhaskar Subramaniam. He's the co-founder and the MD and the CEO of the company, where he'll give us all the details about the company. But when we talk about the company, karta kya hai company? Kya karega aage? These are the questions which comes to your mind. So I'll try to give you all these details one by one. Listen in slowly. It's a media solutions company. It was founded in 2008. Listing, of course, was very recent, and this was listed on January 21st, 2026. But there are a lot of other details about it. Now they have launched, managed, distribute, and monetize a lot of contents, and then it goes on to the on-demand content creation. This, of course, you could say this happens in cable, OTT, and the fast platforms. This is where the future lies when it comes to the streaming. That's what the company is holding, all in all, entire pipeline of products here. They're catering to content providers, distribution folks, and the advertising platforms and advertisers as well. So you could say there is a flywheel kind of getting developed, but majority of the revenue is still coming from distribution and playout services, and the monetization, or you could say the sales ad revenue, that has started to pick up as well. They have served over 400 content providers and over 35 distributors, and the presence, of course, you could talk about it, is across 40 odd countries, serving almost 75 advertisers. They have also maintained that almost, you could say, 80 to 90% of the listed largest players in this segment also are their clients. Also, let's see the geographical revenue breakup. Almost 73% comes from American region, especially US markets. So that'll be very much interesting to understand more that what's the company's, European and the Asia Pacific and even India's expansion plans. However, India is just 1.5 or 2% from the total revenue. Also, the key clients, these are the biggest names in the media space. We have Vivo, Lionsgate Studios, Dazn, EW Scripps, Sinclair Broadcast Group, and even Vizu and Roku make it to the list. These are the large players in the media who will be using this. Remember, this company is into B2B, just to keep that in perspective. Recent works, I'm sure you must have seen at least the break of NFL Super Bowl. That's what, they have done recently. It's very interesting, these important events which are coming in, and the company is at the background of it. Grammy, 2025 Grammy was also done, and this Amagi Media Labs was behind this, and 2026 Winter Olympics also coming in. So very interesting company. But behind the scenes, it's a B2B play. So it will be very much interesting to understand कि screen के आगे क्या है. And that is why we are getting the management. Almost a global industry trend is a $498 billion global broadcast and streaming market. So barely the surface has been scratched, and $3 trillion of the total numbers to look at, out of which Amagi wants a small pie. 10% media corporation, is there, where these operations are on the cloud, and this is where Amagi Media Labs is currently focusing on. And the important thing is the shift from cable to OTT. I'm sure you must be seeing this video in the live television, but later on you see it online as well, and that's also very much important. So definitely look out the socials at NDTV Profit. But there are a lot of questions also. Has the market understood this company after it's getting listed? Infra SaaS in media. Is there a moat in this business model? How different it is with its peers? Because locally there are no peers for this company. Total addressable market is $16.9 billion. So what's the global market share for the company looking like? That's the key question we'll be asking. The third question, very much important, is what's the threat coming in from the larger players or a rising competition? Is there an AI update which can spoil the business model of this company? Who knows? SaaS players have been impacted. That's a big question to be asked. And of course, after IPO, they have money in the bank. Are they looking for further acquisition plans? Because of course, media industry has seen a lot of consolidation, and this also applies to the B2B players as well. So very interesting company, interesting questions, and the company itself is in the middle of migration. Their entire business model comes in is from traditional to, I could say, the modern, or you could say the streaming segment of it. But to understand more, you need to understand our show also. And to understand our show, you need to understand the rating parameters. The holy grail, 3 numbers, financials, no changes. But I have changed a little bit of, ratings for this company. And that is what's important. Operational parameters I have taken instead of the return ratios, because the model is such, you need more time in this to actually get the average return ratios in. So operational parameters are very much important for this company. Also, let's pull out the other rating parameters. Remember, shareholding street cred is just 1 month of entire data coming in. So इसमें आपको ज़्यादा data नहीं मिलेगा. Of course, from IPO pricing, we'll see how much the movement has happened. Peer analysis is also very interesting this time I've got for you. And this time, there aren't any Indian peers, and the global peers, if you talk about it, they are not, you could say, apple to apple. Some of them are coming in one portion of a pipeline, but the company itself claims that it is having the entire product pipeline. That's what we'll ask the company. And of course, the outlook, industry and company, kya hota hai aage? This is the most important thing which you should be tracking. But let's look at the first rating parameter, and that's the income statement. How things have moved out. Revenue, look at it, this has been growing up, 681, 879, 1163 crores. And interestingly, I would like to point about these contracts which are there for the large client. It looks like a perpetual contract because they are still undergoing bigger changes. So this company does enjoy a moat, at least for the traditional players itself. EBITDA also, remember, from FY22 the EBITDA has been coming down as such. Of course, that path to profitability, that's the question which is there, which we ask a lot. And in the Q3 numbers, we can definitely see that the company has turned profitable. But of course, we should judge the company not just on a quarterly basis, but on a fiscal year basis also. Likely FY26, it will turn profitable. And that is where we'll start getting in more coverage on the stocks, be it the analyst community and even from the HNI segment. Q3 numbers, let's look at it, how things have panned out. Company has seen a turnaround quarter. Ghate se munafe mein. That's the word which we call in Hindi. This is very much important. Revenue decent, 22-25%. That's what company has been talking about. But profitability, that is what is very much important, and those numbers have come in. But let's give in some more time for it. This is just 1 quarter of it. So net, it's a neutral rating when it comes to income statement. Balance sheet for a company like this, it's an asset light model company. Debt आपको दिखेगा नहीं. Largely, it's a very decent setup. Nothing much there. Remember, the company is coming just from its IPO, so a little bit of ESOP expense and IPO expense is also there. But largely, the cash numbers are still decent. 490 to 500 crore plus cash is something which we are seeing. That means, and the company is using or may use going ahead in acquisitions as well. Nothing major buyback or dividend announcement has come in. अभी तो सिर्फ IPO ही आया है. It's just been a month, so we need to give it more time. But net, the balance sheet is strong. So I'll give a thumbs up for it. Let's talk about cash flows, and that is where some kind of question marks you will see definitely happening, especially because of the IPO expenses, and the last 6 odd months they have taken a one-time ESOP expense hit as well, and because of that there is a pain when it comes to the net cash flows as well, some kind of lumpiness also coming in. So as long as we don't see you could say a normalized operational cash flow coming in, it becomes very difficult for us to understand. And to be fair, we need to judge the company by the numbers also, and that is why I have given a negative rating for cash flow segment. But to make and to give it a very balanced approach, I have not taken ROC and ROC, I have taken the operational numbers because these numbers are very strong. Cumulative hours were jumped up almost 64% on a year-on-year basis. You can understand content creation कितना हो रहा है, कितने TikTok बन रहे हैं, कितने reel बन रहे हैं, कितने shows आ रहे हैं. You can see how important this has become. The second thing is, of course, the content deliveries. I was talking about that. It's up 37% on a year-on-year basis. And another operational metric I'd like to point out that's doing really well is the distributors' reach. Of course, distribution is the king if we have a content. So, and remember, 31% year-on-year basis reach is increasing, and these numbers are looking big as well. The monetized impressions at the end, everybody wants that. Look at that, it's up 60%. So when you see these operational parameters, you understand it takes time for a company to come for path to profitability. And if you're a traditional investor, you're getting angry, Sharad, why there's no ROC, ROE? This is the reason for that. Now, let's talk about the shareholding, how things are moving. And remember, it's just 1 quarter of, definition is there, which is there here. But there is a little bit of concern for me. There's a promoter holding for this type of business model because it is largely family office, PVC funded. So that's why you're seeing FI is at 43%, DI is at 32%. And there are certain limits also. So promoter, it's very low here. So that means no major control coming in from the promoter definition. But definitely it's still held by a professional team. And largely, let's give it more time to see whether any kind of movement happens amongst the institutions. And as of now, let's keep it at neutral rating. Also, let's talk about the street cred, how things are moving. We spoke about the shareholding, but street cred will give you a little bit of jhalak, and that jhalak is just till the IPO. Yaad rakhiye, the date is this, January 21st, 2026. But even in this bad market, in the month of February, we saw so much volatility happening. March also is volatile to the market. From the IPO price, it's still in the green. It's up 5%. On the other hand, there was a dip on the listing, and still from there it's up 19%. So market is definitely rewarding this company, and this is the time where SaaS companies globally took a very big beating, but ye SaaS company gira nahi. So it's a strong street cred when it comes to this company Amagi Media Labs. But peer analysis is very interesting analysis I have taken. There are no Indian peers, and the global peers also, not everybody has the product stack which the company has. It's the largest full stack cloud native solution against the peers. That's what the company claims, and I saw the RHP and I can confirm, yes, it is. It's a niche media global SaaS infra software. There's an average to it. If you could just show the average of these ratios, this actually goes in for 25 to 40 times in the EV basis. On the price to earnings basis is roughly 16 times. This is the average from the Bloomberg I have taken. This is the infra SaaS at play. But the company, if it enjoys the moat, and it is currently at least seeing from the IPO itself, and that is where it seems like it is enjoying a valuations premium, and there are no Indian peers, remember, and the global peers also, seems like company is actually at a good advantage in terms of size and the product stack. So net peer analysis, to be fair, I've given a strong thumbs up when it comes to Amagi Media Labs. But of course, let's talk about the outlook, how things are panning out. This is the most important thing, is the cloud modernization. This is something which has been playing out for the last decade. It's expected to go in a couple of more decades as well. Also, is the streaming unification and the monetization marketplace. This is where the entire business model is set. Ye core hai. If you are studying this company as an analyst, there's a strong AI stack. That's what I have seen in the con call, and they might command a premium in SaaS market. This is the reason why I have given a thumbs up when it comes to the peer analysis. And look at the amount, $3 trillion in global media entertainment market. So the sky is the limit, and there aren't any peers to actually compare. So it becomes quite easy to actually find this company in this niche, and that's why maybe it's commanding a premium if you compare with other SaaS players which are listed in the Indian market. This is the bullishness coming on the new video economy, the entire show, a lot of shows you see from the mobile screen as well, in the YouTubes at NDTV Profit, and you see this is the future. AI may disrupt infra SaaS models, and each time Anthropic or Claude comes up with a plugin, we see SaaS bleeding. Will that happen to the company? That's also one question mark, and of course that's the threat coming in. And the company has a moat against peers for all-in-one solutions. That's what they talk about it. And definitely there is a flywheel also. So one thing leads to the other, and all of them benefit in, and that's why I think the margins are also getting lifted as well. So net for outlook, it's a strong outlook and a thumbs up coming in, but this, of course, AI and competition fears are always there. So always take things with a pinch of salt. But let's give you the entire rating, how things have panned out, and slowly I'll make you understand the path to profitability is definitely there in the company, but let's give it more time. Balance sheet is strong, it's asset light, and you never know, the cash might be used for acquisitions. Cash flow, company needs to show. Of course, there's a lumpiness from the IPO and ESOP. Operational parameters are bang on. That's what the markets are looking, and it's actually giving that premium. Shareholding, we need to wait some time out. Remember, FIs hold almost 70+% of stake in the company. Street trade from the IPO, it has done well. It's commanding a premium against the global peers, and the outlook, that is where the strength also lies, and that is why the final rating on the higher side for Amagi Media Labs is 6 out of 8 for KYC. But I'm sure there are a lot of questions also which you need to ask, and that is why we'll be joined in by the co-founder, managing director and CEO of Amagi, Bhaskar Subramaniam, and of course he has started his career as a software engineer in Texas Instruments. Okay, there's another AI angle to it. And also co-founded Impulsor. Already that was acquired by a NASDAQ listed company, Surf. And interestingly, Bhaskar is a good cycling enthusiast as well. So pretty much a very interesting profile for Bhaskar. But good afternoon, Bhaskar. Always a pleasure to have you on our show. And AI is something in Amagi also. I can see there is A and I. At the first is A, at the end is I. So now how it changes, because SaaS, for a normal layman person at times gets impacted by AI. So I just want to get this, through this view in, the AI stack, how Amagi is using it, and if yes, is there any threat from the larger players like Claude or Anthropic, or is it something else which you're having a moat?
Thank you very much for having me on the show. I think AI is top of mind for all of us, and we're extremely bullish at Amagi of what the AI transformation can do for the media business. I think we're pretty much leading this whole trend line with lots of investment we're making as a company. Having said that, the delineation of SaaS, and I want to kind of give this as a understanding, important understanding, is when we talk about SaaS, largely the market's talking about horizontal SaaS. There is companies which are building tools and utility software, which people are using it for their productivity gains inside large companies. At Amagi, and like everything else, because we're a vertical software company, what do we mean by that is we are pretty much the heart of our customers' operations. We run their operations pretty much for them. So to that extent, it's a very, very deeply integrated technology platform for our customers. And this is not something you can vibe code yourself through the process. And because of it's also end-to-end capabilities. The big opportunity for us as a company that we see is, if you look at the media business historically, for every $1 of technology spend, there was at least $4 of human cost spent for you to operate these platforms, because video and audio and latencies and sports and news are very hard problems to solve. What we see with AI is a genuine opportunity to change the game by actually bringing in autonomous agentic infrastructure on top of the platforms that we built. And that's the huge opportunity that we're really going after today. So we are really, really bullish on AI.
Right. And Bhaskar, apart from that, AI investments, I see you have cash on the books as well. And of course, IPO is done now. You are a listed player. AI investment plans, have you, earmarked anything for 2026?
We have already been investing. And if you look at it, again, we don't capitalize any of our software. So in spite of the EBITDA that you see, we are continuing to invest heavily. And a lot of our investments are today going into AI investments as a company that we move forward, right? So we are very comfortable with the investments we're making. In addition to the street guidance and expectations we're providing, we're kind of managing both together right now. So we're extremely positive about the overall AI change and we're comfortable with the investments we're making as of today.
The adjusted EBITDA margins, I looked up, it's 14.3%. And in the con call, it was stated that 2/3 of your costs are actually fixed. That means there is a big upside potential for the revenue as well. So could you give me some margin or margin guidance and even the revenue guidance, any kind of ballpark figure for both of these elements? Even if it's adjusted, it's fine.
No, I may not be able to give you exact numbers from a call standpoint, given its future looking to some extent. But what you're seeing is a clear path and a track record that you would see. And again, not just one quarter, but if you look at it in the last 3 years and what we kind of announced and what we've seen, you will see the operating leverage playing out. And that's just the nature of the business. It's nothing to do with the Amagi per se. The nature of the business lends itself to a fixed cost structure, which can actually be able to repeatably provide more and more productivity gains. And that's the reason, if you look at it, the cost, our indirect cost as a percentage of revenue continues to come down, and that flows through to the EBITDA directly for you. And that's going to be the future as well. And we don't see any major surprises or challenges on that directional front.
And interestingly, a lot of business cases come in is that traditional media networks are there and they move on to the streaming. How is this process like? Just to give in a business flow, in short, if you could just explain us, because there is an advertising flywheel element as well. So if you could just give us that entire flow and how does the company have a moat against peers? Could you just explain it to our viewers?
Okay. If you look at it, our customers are anybody who creates content. So content creators, starting from the largest TV channels or OTT operators, to people who are coming out of YouTube and wanting to create their own content and build a media company for themselves. So that's the spread of people that we work with today. And you see on the screen, we take it a DAZN or a Vizio or a Roku, all are large media companies today that are actually trying to really build things. What Amagi does first is what we call as a modernization journey. If you're a traditional TV network and wanting to be in the streaming world, we enable these companies to change all their media operations to cloud first. Essentially, today, they run on a lot of hardware, satellites, OB-vans. You've seen all of this from a television standpoint. We think this infrastructure will go away, and all of this will become software running on the cloud. That's the first part of the journey for any traditional media player. Once you do that, you want to be really building a streaming platform for yourself and also distribute content through streaming and OTT operations for everybody in the world. So we enable our customers to take their content globally. What we call as omni-channel distribution. Exactly like retail, we enable these people to take their content across the globe and sell it to every distributor that's available. That's the second part of the stuff that we do for them. Once they do that, they would like to monetize that through advertising our subscription and get the money back and the analytics of what's happening on the field. We provide them a capability to do that. If you look at it, this is the flywheel for them.
Right. Yeah. And that's a very interesting take, Bhaskar. But the last question, a very short one. Somebody who's young in the 20s right now, playing around with AI agentics, and he wants to make it big in media and education industry, is tracking your business model as well. What's your view for that person?
I'm always paranoid of every new innovation that comes up, right? Two things which can allow us our own ability and agility to innovate, number one. Number two, if you look at it, this business is a very mission critical business. Our customers need longevity and reliability as a very important metric. And in fact, Amagi going public is a big vote of confidence for our customers to bet on companies which are much more both innovative and long-term looking and have a long gestation in terms of survivability and growth. Super important for our customers. So I'm not really worried about the 24-year-old yet. in this
Okay,
business.
so you're not worried about that 24-year-old guy tinkering with the AI agent and trying to analyze the traditional and the modern media as well as you being in the middle. Thank you very much, Bhaskar, for this very interesting interview regarding the company and the industry. And that's a pretty interesting take coming in from Amagi Media's spokesperson, the way the traditional media is moving towards the streaming space. And maybe you're watching this on the YouTube video as well. Company has done well. The KYC rating, we have given 6 out of 8. That's all, folks, for KYC. Stay tuned to NDTV Profit.
Stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक आजकल चल क्या रहा है सिचुएशनशिप आपको पता क्या होता है कभी मैं कह नहीं पाया
इट्स ओके यार
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Asian markets had a strong session in trade. Kospi jumped as much as 12%, staging a sharp rebound from its worst single-day decline. Bulls find some respite on Dalal Street today after 4 days of pain. Nifty jumps more than 80 points while the Sensex gained over 200 points. Metals got some shine back while energy and oil and gas lead the gains. IT and PSU banks are on a back foot. Oil marketing companies are back in the red as higher crude and weaker rupee push the marketing margins sharply into the negative zone. Analysts say losses on petrol and diesel sales are mounting again. Coal India on a tear as escalating tensions in the Middle East underpin the coal prices. Prices of European thermal coal hit their highest level since October 2023 as supply concerns linger. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take a look at the markets which are seeing some bit of relief and a rebound after many days of really a very volatile and weakness that it had seen because of the geopolitical tensions. So right now, coming out of that knee-jerk reaction, and not just our own market, but the Asian markets, they gave us the positive cues as well. And that's what is also impacting and rubbing off on the Indian markets. When we talk about Nifty 50, yes, again at the particular moment, and 25,500 level comfortably achieved and trending above that at the current moment, but still lower than the highest level that it had achieved, which was past 25,600 odd levels. Looking at some of the other internals, well, big boy Reliance Industries is seeing a lot of buying coming in, and that is adding more than 50 points to Nifty 50 as a largest contributor. Some of the other blue chip counters like Larsen and Toubro also is a big contributor, considering that it had fallen the most in the last few trading sessions, also on account of the huge business that it gets from the Middle East. Apart from that, if we really take a look at the sectoral indices, well, metals are the pack which are shining in trade because the global supply concerns are really giving a spike up to the metal prices globally, and that's really coming in well. Defense is doing well, energy is doing well, and on the flip side, it's the IT sector which is back into the red and is showing weakness in trade today. Some of the other counters like State Bank of India from the banking pack is the one which is falling the most, and that also means that Bank Nifty as a particular index is underperforming the key indices at the current moment. When it comes to mid cap as well as the small cap, they are actually trending in line with the key indices today. Let's take it across to a market expert to understand the direction of the market. Sachin Shah, who's the executive director and fund manager at MK Investment Manager, joins in. Sachin, always a pleasure to welcome you on NDTV Profit. How do you see the direction of the market? Of course, it's more of a rebound, some buying coming in at lower levels, but do you see this sustaining?
Yeah, hi Nisha. Thank you so much for having me on the show. Always a pleasure. Yeah, you're right. So, we've actually got into that territory where it's become really uncertain. These are very, very low probability but very high impact events. This kind of a situation. Nevertheless, it's not that this is happening for the first time. We've seen this about 4 years back, and we've seen this many times in the last probably 3-4 decades. And, every time we have seen this kind of sharp cuts on the market. But in the next 3 to 6 months, post these events are sorted, we've seen a very, very sharp rebound. So the way we think about it is that probably this is creating an opportunity for long-term investors to actually get into some of the businesses which were always an expensive valuation, but now they are probably getting into a very reasonable valuation kind of a zone. So I think, as we say that for investors, volatility is a friend, and this is the time to actually capitalize that.
While Sachin, you say that you can capitalize on the opportunities, and especially from the safer counters, the ones which have really shown their might time and again, and it's the time to accumulate those at these lower levels. But what are the no-go areas? Because some of the companies, business dynamics can change forever if this war continues, and on the other hand, some of the sectors which could also see a trajectory change. Any on top of your list?
No, I wouldn't. I wouldn't like to say anything of that sort at this point in time, because every sector, every business will find its own way as long as they have the the standing power, to ride this uncertain times. So as long as you are investing in businesses which have shown resilience in the past, particularly with their management track record and particularly with their balance sheet strength. So I think that's how we are evaluating more bottoms up rather than trying to say that this is something that we would like to avoid. So because we have seen that this kind of times, they don't last too long. And once we are sorted with it, generally most of these businesses tend to bounce, and particularly stock prices tend to bounce back very strongly.
That's right. So overall view on for most of the experts, Sachin, has been that India will really bounce back, considering that geopolitical tensions really de-escalate, or at least the dust settles. But Sachin, if we look at the metal prices the way they are, how would you play that particular space right now?
Yeah, so clearly, if you see, the metals as a sector has been in an uptrend for almost now maybe 12 to 15 months. If you see the entire calendar year 25, metal has been hugely outperforming, and these are very deep cyclical sectors. So once they are in an uptrend, they tend to do very well, and once they get into a downtrend, they also have that kind of a similar kind of a downturn. So I think it's about and every investor, the kind of the appetite that they have to play or to invest in this kind of deep cyclicals. So it depends on every profile of the investor, I would like to think.
Right. And about oil and gas, how would you differentiate between upstream and oil marketing companies, OMCs, and what would be the differentiated play in that, considering the situation really impacts this sector a lot?
No, again, over there, see, as far as Indian oil and gas companies are concerned, I think they all have a very strong moat as far as the distribution is concerned, as far as the refinings are concerned. So I'm not saying that any material changes are going to happen because of this event out here. Yes, there may be some short-term knee-jerk reactions, but structurally, I'm not worried at all. India overall demand continues to grow every year in the range of 3-4% for oil and gas products. So I think that continues. I don't see any changes out there.
Right. So no change over there, and a lot depends on how things really move. But Sachin, obviously at this current moment, we don't know the timeline of the kind of volatility that we are going to see. A lot of equity market trades are also on wait and watch. The fundraising situation has also been impacted of the companies where they can use the equity currency to raise funds at the current moment. So it has a larger impact. What would you suggest to the investors in terms of how they should stagger their cash deployment in this market at the current level, and how slow or fast could that, or cautious approach could that be?
Yeah, I think that's a very fair point, because we don't know how long can this actually last. It may be a few weeks to a few months, right? And hopefully not longer than that. But yeah, so I think clearly an SIP kind of a route, or maybe investing 20-30% at every tranche of maybe 3 to 4% kind of downside in the stock prices or companies that one likes. So yes, it's a good thing to actually spread out your investments over the next few weeks. Because you might get even a better opportunity thanks to the volatility, or sometimes just to capitulation of the markets. So that's one thing that one can plan. But I think more important is where you are investing, and I think that's something is going to be very critical, because one needs to stick to really very, very blue chip kind of companies which can, withstand this kind of the challenges in the external environment. And obviously that's a function of their balance sheet and their management skills.
All right. So cherry picking at this particular moment, and also invest in a staggered manner and in the companies with the proven track record, which are really falling the most. Some of those important points coming in. Sachin Shah, always a pleasure speaking to you. Thank you so much for your perspective on the market. Thank you. All right, moving on then, we are still discussing how the Middle East tension has been impacting various companies. Let me focus the attention on one such company, Vishnu Chemicals. Siddharth Cherukuri, who's the joint managing director of the company, joins in now. Siddharth, thanks so much for stopping by for this discussion. Now, of course, the company supplies chromium and barium compounds to over 50 countries. You are export-heavy company where a large part of your revenue really depends on that. How do you assess this particular situation and its impact on the company?
Good afternoon, Nisha. Thank you very much for having me. Well, geopolitical tensions have definitely made global supply chains a bit more complex. Over the last few years, we have seen disruptions due to conflicts, trade restrictions, sanctions, and countries being a lot more protective and logistical volatility. However, a company like ours, we have diversified markets and strong backward integration, which we have worked and implemented over the last few years. So put us in a relatively better position over our peers globally. Right. We supply chromium bearing chemicals to over 50 countries across Europe today, Europe, America, and Asia. So our strategy has been to maintain a diversified customer base and localized distribution partners. In fact, in some cases, geopolitical shifts have created better opportunities for us in certain end user industry. So while volatility has increased, it has also accelerated our role as a reliable alternative supplier in chromium and barium chemicals globally.
Right. So Siddharth, when you say that the opportunities have two important takeaways, it has also opened opportunities, and that you have a well-diversified geographical spread. So roughly about 46 to 50% of your revenue is driven by exports in major markets, including Brazil, USA, Mexico, South Korea, Germany. Looking at this, which are the areas which are impacted, and how has the better opportunity opened up with this situation?
Now, I would not say it has been impacted. It's really, fallen in our favor, especially with the new product mix, what we have adopted, focusing more on electroplating and other electroplating and pigment chemistry. The key markets include Brazil, US, Mexico, South Korea, Germany. During this quarter, we did see some temporary disruptions due to geopolitical tensions, logistical adjustments, and so on. However, the impact has been meaningful and not structural, I would say. Over diversified customers in over 50 countries, I think we are able to balance between the domestic market as well as exports. So while the short-term fluctuations in specific quarters, the long-term demand for chromium bearing chemicals remain relatively strong, I would say.
That's right, Siddharth. In fact, in the long term, we are not even assessing it because most of the market really expects this situation to really calm down, hopefully sooner. But with that expectation and the hypothesis that it is continuing at least for this particular quarter, a large part of this quarter maybe. Looking at that, Siddharth, you did say that there has been some disruption and some changes in the export-import mix. If you can give a little more guidance on the kind of impact that this particular quarter could see, considering the trend that we are seeing with the disruption that is on the table right now.
Given that our asset is fungible, we are able to quickly balance among the various product mix. Let's say working among various wide end user industry. If one end user industry is going through a low business cycle, we are able to balance. So there won't be any volume or volume impact starting from the key pre-starting raw material. And as well as if you see in the first 9 months, we have seen a 10% year-on-year growth in the revenue and close to 13% profitability growth. And we are confident that it will continue even during this quarter and the quarters we're going to see.
Right. So your export-import mix, how has that changed at the current moment?
So we'll see some growth definitely in our domestic sales. So far it used to be a 55% domestic and 45% export. It will be a lot more domestic. Because we being the only producer of chromium and barium in India, there'll be a lot more demand because of the constrained imports coming from various countries. So we'll try to first address that market and exports. As of now, the things are progressing well. We don't see much of an issue. In fact, we would, given that with this logistical challenges which our clients are foreseeing, there could be actually a pent-up demand, and they'll be looking at adding more to the inventory moving forward. It could actually fall in our favor.
That's right, Siddhartha. What you're saying, I'm getting that because a lot of supply chain disruption has happened and these products cannot also be imported. So probably you are also filling the gap in the domestic market, and a larger domestic market play is what you're saying. What happens to the prices? Has there been an impact on the prices of your products because of the supply chain disruption, not just by demand and supply, but even the realization? Has that been boosted, or how has it been impacted?
As we all are witnessing, all the exporters, since the last 6 months, there has been consistent depreciation in the rupee, which is definitely improving our realization. And moving forward, if the freights are going to increase, we have to pass it on in the export market. And I'm sure this will also impact our peers in the various geographies. So following that, we have to announce price increases in the domestic market as well. So it's definitely going to improve the margins moving forward, in a way, both in the terms of rupee depreciation as well as the value increases which are going to come.
All right. So one more factor, and whenever the export market is much better, and Siddharth, you can give a perspective on the company as well as an industry player. With Hormuz Strait being a risky route right now, the rerouting impact, the port congestion, as well as oil price hike will all add up to freight costs being increased. What would be the impact whenever exports open, or at least you attempt? Will it be first viable? And second, what is the impact that you're seeing on the ground on freight costs and therefore an impact on the industry?
Well, what we have heard from our logistic partners, this the source of Hormuz is mostly for the oil and gas industry, where 60 to 70% of the oil and gas is moved towards the east from the west. But as such, the containerized cargo is not actually going through this, in exception if there's a cargo going to Iran. But as of now, we don't see it will really impact the container movement as such. But we have to see how things pan out. Definitely, there's going to be a cost increases going towards the west, specifically Europe. So we are, we will be updated very soon. But as of now, the freight increases are mainly through the Middle East. As such, that's not a very big market for Vishnu Chemicals, probably 1% or even less of a revenue. That's what I can say.
All right, Siddharth. So many takeaways coming in and a lot of clarity. And thanks so much for taking all our questions so candidly and patiently also, while we are still trying to understand. So definitely some cost escalation you're expecting in your products. You're filling in, or at least the exports are being offset by the import demand. And the Strait of Hormuz is not particularly the region that you ply from. So therefore, no direct impact as such. So these are the important takeaways, and of course the price escalation will be something to watch out for for your company as well. Thank you so much for joining us and giving us a bunch of clarity on how this particular global event is impacting not just Vishnu Chemicals, but a lot of exporters from India when it comes to freight costs. All right, a bunch of counters in the spotlight as well in the market. Mahima has the entire list of stocks that are buzzing in trade today. Tell us, Mahima, what's on your list today?
Right, Nisha. So I'll start with Coal India first because it's been in focus since, the auction prices for Coal India came out. And, a lot of brokerages have come out with their views and the stock is buzzing on the back of that. 4.7% of an uptake is what we're seeing. JP Morgan has maintained neutral with a target price of 397. But what they're saying is that stock is seeing relative outperformance driven by expectations of higher e-auction prices. In terms of sensitivity, every 10% increase in e-auction premium for Coal India increases fair value by around 2 to 2.5%. And apart from e-auction, tailwinds like fundamentals are not yet, kind of looking very strong, and that's why they've maintained the neutral stance on this one. Citi has hiked the target price for this one to 430 versus that of 415 earlier, adding upside on a 90-day catalyst. Higher international core prices should be positive for Coal India is what they're saying. They see potential higher auction prices overall, and 30% discount to spot import parity prices suggests that e-auction prices at that rupees 3,000 per ton versus 2,400 odd in Q3. In terms of the other stock, Ramke Infra, huge order win coming in for this particular counter, a 1,400 crore for a 3,000 odd crore market cap for a company, so certainly a big one, and the stock is spiking on the back of that. Basically, it's an EPC order which will be completed in the next 930 days, and it also includes maintenance contract for the next 4 odd years. The last one is Shadowfax, where ICICI Securities has kind of initiated coverage on this one with a target price of 175. It says that it's delivering value, market share gain led and re-rating in the medium term. Market share gains in e-commerce shipments is what it is seeing, and continued network expansion in D2C will drive the next phase of growth for this one. Hyperlocal, the next structural growth engine, operating leverage led structure margin expansion will happen because of this, and additional kind of optionality through infrastructure leverage is something that one can look at for this particular counter. So this is the overall view of what stocks are buzzing and why they are buzzing in trade today.
All right, Mahima, thanks so much for getting us that entire list that needs to be on our radar today. Now, moving on to the auto space, as JLR sales, remember, continue to slump due to the recent cyber attacks and also slow demand. Is it time for the street to really tilt the focus on Tata Motors passenger vehicles, which is set to benefit from the robust domestic demand and also the overall cost benefits? In fact, our colleague Puneet has been poring over numbers and the statistics and gets us a deep dive. Tell us, Puneet.
Well, thank you for that. It's definitely the India business which is now back in focus compared to the JLR business, which drives majority of the revenue. And when you look at the volume guidance, that's largely the reason why we're putting this focus. Compare the last 4 months since November of 2025, volumes for Tata Motors PV since the cyber attack, this is for JLR specifically, is down 37% at this point of time. And now still in the latest month, while it has lowered, still down 19% as well. On the other side, the flip side of things, Tata Motors, the India business, has shown a stellar growth led by the GST rate cuts. 26% growth was recorded in November. That jumped to almost 47% in January, but continues to be strong momentum in the month of February as well. When you also look at why this disparity, there are 2 key reasons. JLR has been impacted by the cyber attack, weak global demand both in China, Europe, as well as in US now because of the tariffs at the start of the year. While for Tata Motors, the India business, GST rate cuts has been a major trigger in terms of growth, outpacing all the other peers in India at this point, including Mahindra as well as Maruti Suzuki. The other aspect that JLR's FY25 levels of sales will not be recovered even in the next 3 years. So they did sell roughly around 4 lakh units in FY25. That number is not going to come back until FY28 is what brokerages anticipate, and will only reach roughly around 3.8 lakhs. While for the India PV business, which sold roughly around 5.5 to 5.7 lakh units in FY25, that number will materially increase from here on, and brokerages have had their say, had their pick. MK suggests this could be jumping to almost 8.9 lakh vehicles, while Nomura also estimates at least a minimum 37% jump from this standpoint. Finally, in terms of what could be the valuations for the global peers as well of JLR, Mercedes as well as BMW have seen EBITDA, EV by EBITDA multiples cut to almost just 2 and 1.6 times, versus JLR, which is at 1.4. So this shows that there couldn't be too many in terms of valuation multiple premium. And finally, the SOTP, when you look at the India business, has actually increased over the last couple of years versus reduction now for JLR. So that's the picture on Tata Motors. The India business now much more in favor versus JLR.
All right, thanks Puneet for all that detail, but this is the favorite part of the show for me. At least I am tracking sporting action today. India and England face off in a high-stakes semi-finals today, and the stage is set for a blockbuster. India arrive with momentum and a settled in-form core, while England will lean on power hitting and sharp matchups to tilt the contest their way. Now, the toss could really matter for the team, but the conditions should still reward the busy batting through the middle and control at the depth. Now, one spot in the finals, remember, is already taken by New Zealand, which really butchered South Africa last evening. Now, the other will be decided in the clash of the heavyweights today, and we here in the studio are definitely cheering for Men in Blue. With that, it's a wrap on Markets at 12, but keep it with NDTV Profit. Thanks so much.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब डेट पे हमला होगा तो तभी आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है? कभी मैं कह नहीं पाया.
इट्स ओके यार.
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends, before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, good afternoon. There is some bit of respite that's come in for the investors in today's session. How sustainable it is anyone's guess. I think it seems that the markets are now pricing in to some extent the impact when it comes to the war that we are looking at between Israel and Iran.
Well, yes, thanks a lot for that. Good afternoon, Hiral. But looking at the markets, there is a joy after, of course, 4 days of pain coming in. But will this joy sustain going ahead? That's a very big question to be asked. Might be a technical rebound. Nifty is up almost 170 points near its day's high level. That's pretty much interesting. But Nifty Bank hasn't joined the party yet. The heavyweights have not come in. But net we see there is a Sensex expiry at play also, which we'll be talking about, but it's a technical bounce. The Asian markets, when they opened up, Kospi, hitting its upper circuit of 12%, the Nikkei, the Thai indices, all of them doing really well in the trade. So, of course, that follow-on benefit is definitely coming in. The Nifty Bank's technical setup is still weaker than Nifty in this bounce itself. How much this bounce will continue, that's the big question to be asked. This is the key support level which you're looking at. This is where a couple of technical bounces were repeated over the last two trading sessions. So this is something which you should be watching out for. And also the options data is still suggesting a range-bound move is likely. We're not going to see a very wild move on the either sides. That's something to actually ponder upon if you are a trader. This is an important data. Metals, energy, they are doing really well in the trade, but there's a reversal happening. Yesterday IT was stable, but it's a sell-off is coming and the IT drag is there. India VIX interestingly is down 10%. If you're an options player, this is a very important data. It's going below the 19 mark. It's right now at 18.64%. So you can see how much changes or the volatility is coming down in the markets. Sensex expiry is at play. So do not, cheer a lot for the market in the last half an hour or even 1 hour. There might be volatility in the screen. There are three key monitorables right now also. One is the US-Iran tensions, how the developments take place from both the sides. The AI trade, is it resuming or not? The earnings-related news flows coming, and the US jobless claims data, which is coming tonight as well. So you should be watching out for these factors. But yes, overall medium-term basis, it's still a range-bound market. But yes, today we'll definitely take in a good positive up move, and it is sustaining Hiral, Nifty near the day's high level.
Yeah, sustainability becomes the key from here on. Thank you so much for that, Sharad. But let's quickly look at the watch list. The metal stocks are surging in trade, and that's aluminium and metal prices. Because of that surge, that bump up is coming in. ONGC and Oil India, Brent crude is at $84 per barrel, positive for them, but pressurizing the oil marketing companies. Defense stocks, the rally continues amid the war escalation. Your Gujarat gas also is in focus on the back of the LNG availability constraints. Coal India brokerages are positive on the counter. And again, the war situation is what is making e-auctions pretty attractive for Coal India. You have Class 8 truck orders that have come in, on the back of which you have, stocks like, Ramkrishna Forgings, all, Bharat Forge, all of these counters that are in focus as well. Tata Motors, JLR is down, India businesses up in trade. So watch out for Tata Motors pretty closely in today's session. LIC, there's a strategic shift that's happening to high margin products. And that's the reason why there is some bit of a buzz coming in terms of LIC valuation re-rating is a potential. Port counters are positive in trade on the back of the JP Morgan initiation report. G-Shipping trading at a 52-week high of the Baltic Index that has spiked in trade. NTPC buzzing on volumes. Sterlite Tech, LT Food, Sharda Crop, all of these very strong volumes that are picking up in today's session. So that's what we're looking at in terms of the watch list. But Sharad, over to you for the rapid fire. And I think who better than discussing it with Osho Krishnan of Angel One.
Well, thanks a lot for that, Hiral. Osho, good afternoon. Always a pleasure to have you. We'll start our rapid fire. Buy, sell, hold. Jaldi say. The first one is, of course, your metal-related stocks. We see Nalco, Vedanta, all of them buzzing in trade in Nalco also. What's your views on that? Any good medium-term setup looking like here out of these three stocks?
Very good afternoon, Sharad. Yes, no doubt metal counters are into focus. There has been decent traction. So National Aluminium is looking very positive. Again, it might surge towards the zone of 418 to 420 from a very short-term point of view. So this counter can be bought into at current levels. 418 should be the target from short-term perspective.
And Osho, your views on ONGC and Oil India for last 2 to 3 sessions. The Brent crude is going up and there's a beneficiary at play, and now it seems like a medium-term setup is looking there for both of these counters. Any other further up moves, and if yes, what will be the levels?
For ONGC, it has already given a very strong technical breakout from the zone of nearly 260-65 odd levels, for which the target comes around the zone of 308 to 310. So that is the target that I am eyeing for ONGC, and positive cues also provide some kind of robust movement in the counter. So 308, 310 is the target that one can expect in this counter from short to medium term point of view.
All right, next group of stocks is NTPC and Sterlite Tech. Your views on that? Either of them, which is looking much better now?
NT power sector is looking quite positive to me. NTPC has gained strong traction from the zone of nearly 335 towards 400 odd levels. But over the last few trading sessions, the counter has again tested 21-day exponential moving average, which historically has provided cushion. So I expect that again it has a potential to retest the zone of 390, followed by 400 in the short-term period.
And in the cash market, Osho, LT Foods and Sharda Cropchem are doing well, and entirely, if you could say, 1:1 ratio is also coming in the broader indices. Anything in these cash market related stocks?
LT Foods is looking quite positive to me, although on the higher end 430 is still a very stiff hurdle. So that should be, one should keep a track of those levels. If it surpasses 430-35, then we can see resumption in the bullish trend. For Sharda Corp, I expect the momentum has vanished away with the kind of correction that has been seen in the recent period. But 1000-1020 is a decent zone for the counter. Any dip towards the zone of 1000 can be seen as accumulation zone for this counter.
And Osho, your views on the defense stocks? All of them are buzzing in trade, especially we have taken in BL and you could say Data Patterns. These stocks are also doing well. Your views on this?
Selective approach should be there in the defense sector. BL no doubt has given very strong outperformance. Again, it is 4.5% upside upside surge is there in today's trading session. So I expect the momentum should be continued. 474 is the first and potential target from a very short term, maybe like BTST or 1 to 2 trading session. But 474 is the target that I am expecting in BEL.
And Osho, your views on Gujarat Gas stock has taken a beating. Of course, the impact coming in because of geopolitical tensions. They have announced force majeure. That's an important announcement coming in from the company. But any other strict stop losses for Gujarat Gas from here?
Gujarat Gas is having a very strong support around the zone of 370. But looking at the recent volatility in the whole gas companies, there might be some again volatility continued in this counter as well. So 370 should be the strict stop loss. If it concludes or subsides above the zone of 370, then in the coming period we may see a gradual up movement. But looking at the current scenario, one should definitely keep a strict stop loss of 370.
All right, that's the rapid fire for you. Over to you, Hiral.
Thank you so much for that. In fact, another stock that is in focus is a Vikrant Engineering. In fact, the anchored lock-in actually opens up in today's session, but you're not seeing a major pressure that's coming in on a Vikrant Engineering, because usually the moment anchored lock-ins open, there is some bit of selling pressure that comes in on any counter because of the anchors that start going and selling out. Rakesh Markhedkar, CMT at Vikrant Engineering, joins in. Rakesh, welcome to the show. Always a pleasure to speak to you on NDTV Profit. You know, my question coming to you is, last couple of trading sessions also we've seen promoters who have been buying. Because the anchor book actually opens up today in terms of selling, any conversations that you've had with your anchor investors in terms of progress, in terms of their vision to move out and new ones coming in, how is that picture looking like?
Good afternoon, Hiral. Actually, this lock-in expiry is a very normal regulatory milestone after listing. And now there was absolutely no dialogue with this, with the stakeholders, with the investors. In fact, if you review that last week, somewhere in the 28th of February, The promoters, we have increased our shareholding by 2.5 lakhs approximately shares, just to give the confidence to the investors and to the industry.
So moving from here on then, post IPO, because it's a recent listing, in terms of progress, where do you stand versus what you had envisioned?
So the very important thing is the way we planned, because once after this IPO, we were moving very confidently to book our orders. And I'm very happy to say we have unexecuted order book as of today is more than 5,000 crores. That is just more than the double of the same period of last year. It was around 2,200 crores. So we are going ahead with the very strong in the order book, at the same time with the execution. And now we are also preparing for the FY27 and 28, the new areas in the same way, the sectors, so that we maintain our the profitability what we are maintaining for the last 3 years.
Rakesh, good afternoon. Sharad here. I just wanted to add more questions on this. Of course, the next 2 years projections, of course, we are talking about the outlook as well. The capex plans, if any, and what are the current capacity utilization plans looking like? If you could just share that with us.
See, as such, we are not planning any capex plan now. But see, we have the sufficient working capital with us to execute our current orders confidentially. So we are moving with this the current status quo of with the working capital, and then we have the funds available from the IPO, which we are utilizing 100% in the working capital. And then we are 100% on the EPC only.
Rakesh, another question I want to ask you is with regards to your expansion in the Middle East in terms of EPC as a business. With everything that's happening right now, what are your conversations? What is the status of the same?
See that, as you know, we are preparing for our expansion internationally, because all my competitors, they have more than 50% their shares in the overseas business. We are confident, we are working on that, and we started working quoting, but we don't compromise with our margins. And now, but seeing that the conditions for the last 2 weeks, we have to wait and watch for that next movement in that direction.
But anything that you've picked up so far right now, at what stage are you in terms of expansion in the Middle East? Because I remember having that conversation with you in the past as well.
We are in the registration process. We are almost closing that. This is one. We have identified the partners, and then we are preparing with the requirement of our customers to execute the project in the solar and power T&D in both areas.
Okay, so right now you're not seeing any impact, Rakesh, in terms of the war that's ongoing. And do you think there could be a delay in terms of the plans with regards to expansion there, or you think everything could be on track?
Yeah, we are very closely watching the geopolitical conditions and war situation, what is happening there. And this is what we should do, and we are working on that. And then, since we got enough order book to take care of FY27, we are nothing in hurry to take any risk and chance. So we are evaluating the situation very carefully and to taking the call for the next move.
Understood. Thank you so much for joining in. Always a pleasure to speak to you, and thank you for the update.
Thank you very much. Thank you very
Rakesh,
much. Very nice talking
CMD.
to you.
Always a pleasure to speak to you, of Vikran Engineering, talking to us in terms of the impact when it comes to US-Israel war, Iran-Israel war, I beg your pardon. And the reason why we talk about this as well is because this was one of the companies that was looking at expanding their EPC book in the Middle East as well. But probably those plans will be something that could be put on hold as well. As of now, but they're monitoring the situation, and there could be a delay coming in on that front. But moving on, the US-Iran war, as we're talking about, has been pushing defense stocks into sharp focus with India's key defense manufacturers back in the spotlight. One such player is MTAR Technologies, and they're guiding for over 50% revenue growth in FY27. In fact, they have a lot of partnerships that are ongoing with Israel-based companies. Let's listen into what the Managing Director, Parvat Srinivas Reddy, told NDTV Profit.
we will be getting strong orders moving forward as well, the way things are going right now. You must have seen in the last quarter and even in the current quarter, we have received substantial orders. The execution, basically, I've said some are long-term cycle orders and some are short-term cycle orders which have to be executed within 1 year. So when I said that we are looking at a revenue guidance of 50% increase for the next year, that itself is an indication that a lot of orders are going to get executed within the 1 year span itself, and the rest will move on to the second and third year.
Okay, so that's the management of MTAR. The stock seeing gains of a little over 3%. Let's get in Sachin Jasuja, Head of Equities and Founding Partner at Centricity Wealth Tech as well. Sachin, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My question coming to you is the impact of Iran-Israel war on the defense companies, because you're seeing good momentum there. The question over here is, yes, the order book will get built up, but what happens when it comes to execution? Your views?
Yeah, again, I think you are absolutely right. Execution is the key. The only order book will not, solve the purpose. And what we have seen, with this crisis, every time we see that something is changing on the defense side, the new kind of technology is being implemented. In the recent war, we have seen that more of airstrikes war, right? So what we have seen, the role of satellite images, the role of electronics radars have actually gone up. So from that perspective, I think we have seen also the kind of companies like MTAR Technologies or Data Patterns making new all-time highs also in this kind of scenario, whereas other defense stocks have struggled. Right. So market will differentiate that what is a futuristic defense company where the money should flow. The only order book, having the large order book will not only, give the validation at this point of time. Yes, even the old names like BYD, HAL will continue to garner a lot of orders, but execution will remain the key. And the more investors' money, I think, move towards this new age defense companies rather than legacy players.
Moving on from defense, let's talk about an interesting counter, that is GE Shipping. The stock has hit its 52-week high levels. But why is the stock gaining in trade? To give us more perspective, we're joined in by Jasmeet. Jasmeet, hi. What's the reason for GE Shipping going up?
Well, sure. Thank you for that. Now, if you look at the overall stock, it's up to 66% in over last 1 year. And overall stock is buzzing on the back of the spike in the Baltic Index. Now, what does the Baltic Index do? Is it tracks the overall rate of transporting goods via the sea. And that index is up nearly 80% since the war broke out in last 4 trading sessions. And the stock has hit 20% high consecutively in last 3 trading sessions. And that's why the buzz. So higher the cost would lead to higher top line for the company. And that's why the stock is buzzing in trade and up nearly 3% in today's trade.
All right, thanks a lot, Jasmeet, for that. Sachin, want to get your views on GE Shipping right now. Is it a structural up move we can expect? Fundamentally, how does the company look now?
Yeah, fundamentals are also very strong. See, as a major tanker, operator, and we know that in this kind of crisis scenario, we realize that these are very prominent plays where we have to be dependent, and the freight rates goes up, the Baltic Index rate goes up, then they get kind of a windfall gains, and generally these kind of gains set off the kind of volumes which are being hit in this kind of supply chain disruptions. So looking at that scenario, and specifically if you talk about GE Shipping, the company has reduced debt, their interest coverage ratio is good enough, and the revenues are going up, still I think trading at very reasonable valuations. So looking at that structure in current scenario where we have seen the geopolitical scenario has been going really bad. And even in a normal scenario, I think the demand of such companies will only go up as the export-import goes up. And, in this kind of scenario, again, these kind of companies get more prominence. So, yes, fundamentally, technically, I think we like the company. It has run up good, may see some correction also, but for long term also, this sounds like a good story.
So that's with regards to GE Shipping. But moving on, one stock which is not really in the news but could be trending in trade, LIC, and that's back at the center of the market conversation as a mix of catalysts and constraints shape its near-term trajectory. The stock continues to trade at a discount to peers, but a clear shift in fundamentals and the upcoming IDBI stake sale could actually help narrow that gap. And at the same time, the government's planned OFS and regulatory stake requirements keep a lid on the sentiment. So there could be short-term pain when the OFS comes in, but probably that could be the last opportunity that an investor would get to look at an LIC with such low valuations. In addition to that, you have the NSE IPO also, which is planned. So that is another catalyst that one should be watching out for. Sachin, how are you looking at a LIC? We did do a deep dive today, where if you talk about the stock, it's nearly at a 13% discount to its issue price. We're talking about levels of around 949 in terms of issue. And apart from that, now the fundamental shift is pretty strong. You're talking about 100% profit windfall when it comes to the IDBI stake sale. We've not really considered NSE, IPO at this juncture. And if you have to look at valuations, the price to book value, we're looking at a 3.88 times versus peers, which are in that range of 7 times to almost 10.5 times. So clearly a big gap coming in there. Do you think this could be a re-rating candidate and an opportunity to buy now?
We actually don't think like that, Hiral. We think that even though the value unlocking can happen through IDBI or NSA, IPOs, etc. But yes, what we feel that the main thing is operating business, where they will continue to struggle in coming years by looking at the new fintechs coming into the insurance segment also. So looking at that scenario, and we have seen in the past also, so whenever the main business is not doing well and there are some clouds over there because businesses are generally valued for maybe 5, 10, 20 years forward. So only one-time windfall gains will not, solve any purpose. Yes, short time we may see up move, but the company has to deliver on the numbers rather than on this unlocking of value by the stake sales at the time of IPO. So we don't think that, and I think still one should evaluate the private names which are doing quite well as compared to the public names in the insurance segment.
We spoke about LIC, but interesting data has come for the month of February, the Class 8 orders, and to give it the entire perspective about it, and of course, strength is also coming in, is joining us Puneet. Good afternoon, Puneet. What are the key takeaways from this?
Well, most certainly has been very strong, Sharad, at this point of time. Almost a 47% growth on a month-on-month basis, but 160% growth on a YY basis has come in for the Class 8 trucks in US. Now, companies like Bharat Forge, MM Forging, as well as Ramakrishna Forging come into focus at this point of time. When you look at, this is the highest orders since September of 2022. A lot of buyers were on the sidelines because of this, because of the regulations that were expected to come in H2 of FY26. Now that they have been deferred, you see that the buyers are finally making the choice to come in and purchase. So that's the number. Apart from that, also, when you look at the season, which generally starts from September till August next year, has had a good offtake of almost 2 to 3 months now. So 2026 season could be the one where you could see very strong growth after a very lean period of the last 15 months.
Thanks a lot, Puneet, for that. And of course, we're seeing for second or third straight month, the overall sales has been good. Sachin, I want to get your views on this. Bharat Forge, RK Forge, all these forging companies are expecting that the numbers might come up more going ahead. Your views on that?
Yes, I think truck replacement theme has really worked well for these companies. And even overall on the automobile side, we have seen the commercial vehicle segment has done really better as compared to the normal passenger vehicle segment. So even though the Class 8 has done really well because of that cycle may go forward for 1 or 2 years at least. So we may see that the Bharat Forge can break that zone of 20 to 25,000. That was the monthly sale of Class 8 trucks from the Bharat Forge. That was the average. But I think the stock has done well. The valuations are slightly stretched. And going forward, we have to see because even in China now, almost 30-35% of the trucks are EV trucks now. So a lot of technologies changes are coming into the automobile segment, even in the commercial vehicle side. And how these companies, whether it is Motors Sumi, Bharat Forge, Bosch, so these kind of companies, how they evolve, who is gaining that kind of technology advancement first, I think that will differentiate these companies' future story.
So Interesting conversations coming in there. Thank you, Sachin, so much for joining in. Always a pleasure to speak to you. We've spoken about stocks that are trending and what NDTV Profit has identified, but let's see what Google Trends are also indicating in trade today. Which are the searches which are leading to that kind of move? BSC, strong volume, strong moves on the back of the derivative contract additions. HAL, BEL, both of these counters from the defense pack continue to see that up move on the back of the geopolitical concerns. Yes Bank also is an interesting one, good volumes there. And RVNL, which is seeing some smart moves in today's session. So interesting names that Google Trends has also picked up, and that should be on one's radar. But completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit for lunchtime trades.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. New Year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी jingle 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 बस आज का jingle 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 चल करें थोड़े single 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 क्योंकि तू है single 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 baby I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Asian markets had a strong session in trade today. Kospi jumped as much as 12%, staging a sharp rebound from its worst single-day decline previously. Back home then, bulls find some respite on the last street after 4 days of pain. Nifty jumps more than 160 points while the Sensex gains over 490 points as well. Metals got some shine back while energy and oil and gas also led gains. When you talk about IT and PSU banks, they were on the back foot. Now, oil marketing companies are back in the red as higher crude and a weaker rupee push marketing margins sharply into the negative territory. Analysts, in fact, say that losses on petrol and diesel sales are amounting yet again. Coal India on a tear as escalating tensions in the Middle East underpin coal prices. Prices of European thermal coal hit their highest level since October 2023 thereabout as supply concerns linger. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. Now, first things first, let's take a very quick look at the markets, and it's looking like some strength is really returning to the Lal Street after 4 days of pain. So you're looking at the Nifty as well, up about 170 odd points, almost 180 points right now as we speak. When you talk about Sensex as well, about a 500 odd point jump is what you're seeing coming in there as well. When you talk about the entire sectoral picture, that is very sharply tilted in the favor of green right now. So what's leading the gains is metals that are shining quite bright today in the session in terms of the sectoral gainers. Other than that, what's in good shape is energy, oil and gas, pharma, realty, media and auto, exactly in that order. Those are some of your top gainers sectorally. When you talk about what's on the back foot, something like IT that is on the back foot leading losses top laggard right now, and you do have PSU banks and FMCG also slight bit of losses coming in on that front when you talk about these three sectors. But with that in mind, let's quickly take a look at some of the stocks that are also buzzing away. So something like a Mazagon Dog, LT Foods as well, 9.5% uptick thereabout coming in. Garden Reach, no surprises for guessing that shipbuilding counters are doing quite well right now. So something like a Garden Reach with that 8% uptick. Cochin Shipyard as well, 5.5%, almost 6% actually uptick coming in on that particular counter. So those are some of your top gainers. Coal India also 5.5% uptick coming in on the back of coal prices gaining. On the flip side, when you talk about the list of losers as well, something like a Gujarat Gas is trading with a knock of about 6% thereabout. Netweb Tech, TBO Tech, Agility India, those are some of your top losers as well, down anywhere between 5 to about 6%, 7 odd percent thereabout. And what's also not doing well from within the Nifty 50 pack is some of your IT names, so something like an HCL Tech, Tech Mahindra also, and even TCS trading with a cut of about 1% to somewhere between 1 to about 2%. But with that in mind, let's also get you a very quick check going on the world of commodities and get you a check going on oil as well as gold. First things first, and we'll also get you insights throughout the course of the show. But first things first, when you talk about oil that's extending rally that we've seen yet again, you do have Brent climbing toward that $85 a barrel level. You're seeing vessel movements through the Strait of Hormuz that is currently grinding to a total halt right now. So that's something that you're seeing as a broader background, which is why oil prices, in fact, are good when it comes to the prices, but even in terms of the prompt spread and the technicals. Now, we'll talk about that in just a bit. Gold also advancing right now, pushing higher after the dollar also declined. And that's also something that you're seeing coming in. And other than that, of course, you do have investors seeking safer assets amid that escalation and conflict that you've seen coming in as far as gold is concerned. Other than that, when you talk about prices for silver, also trading with gains. So that's broadly the kind of setup that you have. But Ajay Kedia, Director, Kedia Advisory, is also joining us on the show. Mr. Kedia, a very good afternoon to you, and thank you so much for taking time out and joining us. It is a fabulous week to be talking to you. And I say that because it's been quite the complex moves that we've seen as far as commodities are concerned. There's still a bit of volatility, but it does look like upward momentum really seems to be, gaining shape right now when you talk about oil and even gold as well. But first, let's talk about gold prices, because it's looking like the dust has finally settled. Do you think that these are just fundamentals, or these are just hiked up safe haven bets at this point in time?
Very good afternoon, Shajit. See, first of all, whenever there is any geopolitical tension or any term like this, So generally, we see an immediate reaction in gold prices as a safe haven. On Saturday, as escalation has started, we were expecting the prices should be moving towards $5,700-$5,800 mark, at least a new high. But on the contrary, we have seen gold prices and silver prices open slightly flat to positive, then corrected. That clearly shows that whatever the war premium that has been already been absorbed in the market. And secondly, whenever this type of geopolitical tension comes, sell-off in equity market has been seen. To make this losses good, generally we see this type of pullback in gold and silver. But up till now, as gold is holding about $5,000 mark, we may see support continue to be there, but be cautious because it's not like Russia-Ukraine war that has been continued from last 4 years, because Iran, US, Israel, this is a very consecutive situation in Middle East. So we don't expect, or even market don't expect, this will be escalating more than 1 week or 15 days. If it is so, any de-escalation point comes, definitely we can see a sharp correction in gold and silver also. But as of now, above $5,000 mark, we may see prices moving to the level of 54 as of now.
Mr. Kedia, are you willing to put a number to that pullback that you're talking about right now? When you talk about that pullback on a de-escalation, what is the kind of estimate that you're keeping in mind when it comes to that particular pullback that you're talking about?
One thing is very much clear, whenever geopolitical tension, gold will get a support. So already in the month of January, we have seen geopolitical tension, central bank buying, ETF buying, that has made gold to test a high of 5,600. So as of now, on upper side, we are expecting 56 to 58.50 if this geopolitical tension continues to be there. But slightly be cautious. A break and hold below 5,000 level mark can find the support at 4,400 or even 4,150 as of now. Because ETF in the month of Feb, we have seen initially the numbers was quite good, but now with the volatility, the demand is been slightly diminishing and profit booking has already started triggering in the month of Feb. So slightly be cautious. A downside support could be 44.50 as an immediate, or near to 41.50 we can see.
Right, no, absolutely, and that's also quite interesting in terms of the way that the entire situation is right now unfolding as well, Mr. Kedia. But, you know, when you talk about oil prices, I wanted to also get a sense of what you think about the movements on that front as well, because the geopolitical risk premium that you've mentioned, or the war premium for the benefit of our viewers, that's also very much there, especially with the kind of the situation that is unfolding when it comes to the Strait of Hormuz right now.
I think we have seen already Russia-Ukraine, but Strait of Hormuz is one of the most choke point, because globally 20% of oil move from this choke point. And as we know, already particularly for India, that will be a double whammy, because earlier we used to import from Russia and now we have shifted to Venezuela and other countries. But this is the route which has been impacting everyone. And almost we have seen the Fed has gained, and even the, we can say, insurance premium has been continued to be on higher side. So slightly concerns would be there for crude oil. If this extension would be more than 2-3 days from here, maybe we can see prices moving to the level of, let's say, $90-$95 also. But any de-escalation could be again finding the support at $70, because we have been oversupplied since last 1 year. OPEC is trying to push more production in the market in the month of April. But timing, it's important that this geopolitical tension should not exceed more than a week. Otherwise, it will be impacting for India also, for global market also. Maximum higher side, we may expect 90-95 if this escalation continue to be there for next 1 week period.
No, absolutely, and it is very clear that, you know, it could be possible that if there's a de-escalation, then you'll see a very sharp reversal in the kind of moves that we've seen as far as the entire commodity complex is concerned. But keeping that in mind, Mr. Kedia, all things constant, of course, seeing that, you know, these triggers are something that you're looking away from. If you were to do that, and if you were to take a look at the moves coming in for oil, gold, as well as silver, all three of them, very quickly, anybody who's already placed bets on the table, especially when it comes to the precious metals complex, what do you think they should be doing at this point in time?
Right now, market is trading with a high volatility, margins are high, and we don't know whether this de-escalation will start immediately or it will take time. Yesterday, there was a report from some reputed newspaper, but after that it has been revoked. So unless and until there is a clarity, better stay away, because see, gold like commodity has given a return of almost 125% in last 1 year. Silver has given a return of more than 300%. So I think here the war premium is important. Secondly, the return has already been made, because this war-like situation is not new to the market, particularly for gold and silver. We have witnessed around 6 to 7 war in last 4-5 years. So I think one should not make a long-term position at this level. Maybe for a speculative move, we can buy near to 5100, put a stop loss of let's say 5000, around 5400 you should exit. But this is not a right time to add in portfolio gold and silver time. It may support because of safe haven against equity. What we have seen up till now, equity market is dropping and gold is steady to positive. But this is not a time to add in portfolio and sit for next 1 year period.
No, absolutely, and it is very clear that you'll have to really stay on the sidelines given all the volatility that is in the markets. Thank you so much, Mr. Kedia, for taking time out and joining us this afternoon. So there you go. That's the entire outlook coming in for the next few weeks, but also for the next few months when you talk about all three of these commodities. But airfares between North America and India have skyrocketed after airspace closures, with spot fares also surging up to 150%. So when you talk about key routes from New York and Chicago to Mumbai and Delhi, they're seeing triple-digit spikes as well coming in. In fact, Danish is joining in with some more details here. Danish.
Well, that's correct. Due to the current situation that we're seeing in the Middle East, this is impacting the long-haul airfare. And if we specifically talk about the spot airfare, so see, spot airfare is usually higher because usually people buy these tickets when certain travel arrangements are not planned well in advance. But looking at the current situation, we are seeing that there is a sudden surge in demand for flights from US to India. And just to give you a few examples, if we look about connections between New Delhi, JFK and New Delhi, which is in New York, usually the spot airfare for these tickets is between 35,000 to 70,000 rupees, and this is the economy class airfare that I'm talking about. But even now, as per the research done by NDTV Profit, we are seeing that this airfare has spiked multi times, 2x, 3x from the current prices. And if you look at the choice of airlines that are there are very few options. If you want to travel to India via an American carrier, those flights are completely sold out. So passengers are left with other less preferred airlines, for example Ethiopian Air, and if you look at those ticket prices, even they are surging between 1.50 lakh rupees to 1.60 lakh rupees. This is just an example from JFK to New Delhi. But similarly, if you look at the ticket prices, spot ticket prices from Chicago to Mumbai, similarly the airfare has surged between over 150%. So this is very surprising, and one of the major reasons why this is happening, it is because of the key airspace closure over the Middle East, which is there, because of which airplanes have to take a longer route. And if we look at the connections between India and the US, there's only Air India that has direct flights between both the countries, and then there are a bunch of American airlines that have direct connections. But then we also come to certain different airlines like Air France and KLM. So if anyone wants to even board those planes, they'll have to pay more than 1.50 lakh rupees. All in all, if we see, spot airfare has surged because of key airspace closure over the Middle East.
Absolutely. Be ready to shell out more money is the headline that you're really picking up here, Danish. Thank you so much for joining in with that update there. So there you go. That's a key update coming in as far as the airfares are concerned. But with that, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है,
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. Now it's time to put the spotlight on LIC, that is back at the center of market conversation as a mix of catalyst and constraints shape its near-term trajectory. Now, when you talk about this particular counter, it's trading at a discount to peers, but a clear shift in fundamentals is also what you're seeing. The upcoming IDBI stake sale is also a case in point that you're looking at. At the same time, you do have the government's planned OFS and regulatory stake requirements that are keeping a lid on the sentiment at this point in time. To make sense of all of these triggers, in fact, we have Hiral standing by with some more analysis.
Thank you so much for that. So clearly, it continues to trade below its issue price in the month of May 2022. Now, there is a strong fundamental shift happening over here where we're talking about Q3 numbers which have shown a significant improvement on the back of a change in product mix. Now, IDBI catalyst is a 100% windfall gain for them because the divestment where LIC would offload around a little over 30% would actually fetch them close to 33 to 36,000 crores as well. And then post that, LIC is expected to retain around 19%, and over 2028 they will have to reduce it to almost below 15%. Now, the only risk to this is the government OFS in LIC, which was likely in the fourth quarter of FY26, which is the current quarter, and they were looking at a 1.1 to 3% in terms of the OFS. That would potentially put some bit of pressure in terms of the stock price, but whether that time becomes an opportunity to buy a LIC is anyone's guess. The risk reward is seeming majorly favorable if you look across things, when you talk about the IDBI stake sale, LIC OFS, the residual IDBI holding, and the regulatory exit that would be required. So all of these factors majorly are on the positive side. Very moderate or high risk are only in two factors. Valuations also are at a discount versus the peers. And if you talk about brokerages, majority of them are positive, and the highest target price that we're seeing on this one is 1,345, which is by a Citi, and they have a buy recommendation as well. So brokerages positive, valuations absolutely cheap as compared to private peers, and the IDBI catalyst along with the NSE IPO that would come in are the key catalysts that you should be watching out for.
No, absolutely. A bunch of triggers that you're looking at here, Hiral. Thank you so much for joining in with that entire lowdown coming in as far as LIC is concerned. But let's also get you some analysis. In fact, joining us on the show right now is Aditya Shah, founder, Hercules Advisors as well. Mr. Shah, thank you so much and a very good afternoon to you. First things first, I wanted to get a sense of what you think about this particular price paradox that we've seen when you talk about this particular counter, because you're seeing it trade below its May 2022 IPO price of 949 rupees thereabout, and it's also trading at a nearly 13% discount from its issue price. What are you looking at in terms of the key triggers? Which are the ones that make it to your radar?
So for LIC, there were technical reasons for the stock not performing. Even though the stock is cheap, the value of new business margins was near about 8% to 10% when the IPO came in. LIC is embarked on improvement of these margins. So basically, this is the margin that the company makes on any policy that the company really sells. It was at 8%, whereas the strongest peer, which is HDFC Life or an ICICI Pru Life, would have it close to 25 to 30%. So LIC has started a journey to improve this. They have come to about 18 to 21% in Q3, and this improvement will continue to go on. Then the second point is the increase in the risk products, which is the term plan. As that continues to really increase, you will find LIC will continue to do well. Then after that, as we see that government tried to save IDBI Bank by selling it to LIC. Now in the future, as the stake sale of IDBI Bank really happens, a lot of problems for LIC will also get solved. So from my perspective, there are a lot of positive triggers that are happening in LIC. Also, the valuation, in my view, is not cheap, absolutely. But when you compare it to the other private sector peers, they are cheap. So from my perspective, LIC could be a contra bet for the period of next 2 to 3 years. But only high risk investors should invest. Time and again, we've seen IDBI Bank trying to divest, but that divestment has not played out. So only high-risk investors should take a look here. Low-risk investors should not go into the stock.
Rather than low-risk investors should really stay away from the stock right now. That's 3 points, in fact, covered in Aditya's answer itself. So IDBI catalyst that you're talking about, the valuation gap and the price paradox. Aditya, the next thing that I wanted to understand is how does it really compare versus its peers, and what kind of an upside are you also penciling in? Is there a number perhaps that you're willing to put on this particular upside that you're penciling in?
So generally, LIC does have a lower share of the risk products. Risk products, a company makes anywhere between 65 to 100% on the risk product, because the risk product, which is purely a term plan, is a lower share of their total business. That is one of the reasons why the valuation is lower for LIC. So from my perspective, that lower valuation is warranted. However, LIC is huge, nearly 30 lakh crores of investment, means they are really strong on their investment side. So from my perspective, the valuation will not come to what HDFC Life or an SBI Life is that, but it could easily go to 4.5 times. So from my perspective, in LIC, I will be positive on LIC. I don't have we generally don't tend to give any price targets per se, but long-term investors could make a decent amount of return in LIC.
No, absolutely. And thank you so much for joining in today, Aditya, as well. There you go. That's the entire analysis coming in as far as LIC is concerned, though that's 4 to 5 points covered when you talk about this particular counter. But let's also tune into something that is very important for cricket fans this evening, because third straight semi-final meeting, 1 win each. Adelaide went England's way, and you do have Guyana that belongs to India. But now it's round 3 at the Wankhede Stadium with the third title on the line. Let's take a look at this special report.
Wankhede,
the ground of 2011 glory. But World Cup semi-finals here haven't always been kind to India. Both sides arrive without playing their best cricket and are still standing.
Yeah, I mean, for us, you know, that is something we haven't really spoken about the perfect game. I think the quality of this team has been shown that, you know, on the day somebody can put their hand up and put up a performance. And then hopefully now in the last two games, especially now tomorrow night, we can put that special performance in.
When it gets tight, India turns to Jasprit Bumrah. They always do. But inconsistency has trailed them. Abhishek Sharma, hot and cold, Varun Chakravarti searching for rhythm. There have been 13 dropped catches in the tournament.
Nobody looks to drop a catch on purpose. Like it's not like we don't train it. I mean, there's a lot of focus going into our fielding, and that was one of the key points heading into the World Cup here. So the guys do train and work hard on our fielding. You know, at times, is it a mindset thing?
England's campaign has been patchy and scrappy. Back-to-back embarrassments against Nepal and Italy, yet they are here. 5th straight semi-final. Sam Curran has returned to the side. Will Jacks has bailed them out with 4 Player of the Match performances. But Jos Buttler and Phil Salt, the most feared opening pair in T20 cricket, have managed just 84 runs in 7 stands, none past the 4th over.
We've won them tight games, which in World Cups proved to be very important as well, and we've got a lot of confidence going into the deeper parts of the game. We've won games, like you said, which we probably shouldn't have won, and it just feels like we've never really been out of any game so far.
Short boundaries, fast outfield, and due later, Wankhede will demand a lot of bravery. The team that hesitates will vanish fast on Thursday night. Neither of the teams have had a perfect run into the semi-final. Captain Harry Brook of England says that you don't need to have a perfect match to win a tournament. Perfect or not, the semi-final in Wankhede on Thursday night promises noise, nerves, and possibly fireworks.
Alright, then there's a title that is on the line, 13 drop catches in the tournament, and India hopefully draws at 7 p.m. this evening. But that's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in. Small cap buzzers on the other side.
The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rag on with Shankar Ehsaan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma and I am your Automate.